Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Thank you for being here. Happy Thursday. Let me get my my banner set up here. Hold up. There we go. Very nice. Yeah, I hope you guys are doing well. Let's see what is moving this morning. We had a couple interesting moves overnight. You have silver down a little bit here. Oil continues to be interesting, back towards those highs, continues pushing. I am out of my oil trade, but mentioned yesterday I was looking for a chance to re-enter once more. Did not quite get it, so I'm still on the sidelines with oil. Good morning. Thanks for being here. I'm short the DAX. What is the DAX doing recently? DAX does look pretty weak here. Kind of broke through this resistance here and then tried to hold it and then plummeted lower here. We'll see where indices go. We do have some in the red here today. Take a look at the Nasdaq and S&P 500 showing some weakness. And this is the theme of this market here recently is you get these head turner moves, right? You get these like one day pops, and then the next day we're dropping, and then we're popping huge, and then we're dropping huge. And it's like this market just lacks clear direction when it comes to, is the audio a little off? Let me check. Let me just double check that my mic is correct. Should be the right mic. Let me know, guys, if my audio sounds bad. I'm long dollar yen, 4-hour support. I was looking actually at that I know exactly the level you're talking about because I looked at it and I thought it looked really good too. But I did not take the trade. I did get a dollar long position going. I'll talk about it in a second. Audio's good. Okay, thanks. Thanks, guys. Yeah, look at this. This is a pretty clean 4-hour chart for dollar yen. Let's just mark this one up. Let's see. Four-hour support. Yeah, this looks solid right there. And I think dollar yen, I think personally dollar yen's probably headed back to the top end of this range. Dollar is just very strong here recently. You are getting these kind of punch back downs, but dollar has been able, at least in the last few weeks, every time you get the dollar to go down, there's a bid that gets hit on it. Like, check this out. You've had, dollar drop, consolidation, dollar pop, right? Consolidation, pop. I'm not surprised at all that we've paused here where we have, but I do think that the natural where the dollar wants to go right now continues to be higher. I think the dollar index really wants to go test the upper limits of this consolidation zone that we've been in for several months now, really going back like a year. The dollar index has not gone anywhere. I think the dollar index wants to try and break that to the upside. Today we have some unemployment claims numbers. We've recently had some very strong data come out here in the jobs world. We'll continue to monitor this stuff because there's some stuff that's a little not super dollar bullish. But a lot of the fundamentals right now, the macro data, still looks really solid. So if we're looking at the jobs market, for example, There is a big disclaimer here that needs to go with this, because of course tomorrow we get the non-farm payroll event where we will get some pretty important updates on jobs data, notably unemployment rate and non-farm. Today we get the weekly jobless claims. So understand that there is some severe volatility that could come into the scoring here within EdgeFinder. Let's paint a picture, for example, that we have all three of these data points come in worse than expected. You could be looking at a scenario where, okay, dollar is starting to get some weaker readings. So I am open-minded to that. You know, I'm going into the end of this week, generally speaking, a little bit more positive on the dollar. Although a couple things holding me back here are definitely going to be sentiment scoring. Look at this. Institutions sold on the dollar week over week. They maintain a pretty neutral stance overall. That's why you're getting neutral in terms of net positioning. But the latest buys and sells are showing a little bit of sell pressure on the dollar. We also have some crowd sentiment that is seemingly very bullish on the dollar right now. So that includes me. So, you know, I'm a little bit cautious. I did take a short position on pound dollar specifically, though, because pound dollar is giving me a really good reading here. -8 score here, pound dollar. I made a post inside of our group this morning. Let me see if I can share that really quick just to show you a little bit of what that might look like. In case you're considering joining us, we are doing some discounts right now on the VIP membership. So this was my trade alert. This is kind of what a trade alert from me looks like. A breakdown as to why I'm short the pound dollar. I do really like the technical setup. I discussed this yesterday on live stream, but decided to pull the trigger here this morning on the pullback that we were seeing in the dollar. And so we'll see if that's a good play. Of course, if it isn't, we'll just take a small loss and move on to the next. That, you know, people asked in the chat this morning, we had a conversation because another trader that comes on here, Ivan, you might know him, and I think Marco also, they have bullish setups on the pound dollar. And so people were confused. They're like, well, Nick, you're short pound dollar and Marco and Ivan are long pound dollar. And then people are like, oh, well, who knows better? And it's like you're missing the key element of profitable trading. It's not about one trade. It's not about the next trade or the trade after that. It's about the next 1,000. I could be long, or in this case, I could be short. They could be long. One of us wins, the other loses, or both of us win. It is possible also. But bigger picture, do the systems that we are running make more than we lose? That's it. That's all that matters, right? Because so many people will focus on like, oh, you know, what's going to happen next with the dollar? And they will fixate their whole account. They'll like throw the whole account on thinking dollar's going to rise or dollar's going to fall. And when it doesn't do that, they blow up. Whereas if you actually have a profitable edge, the smart thing to do is to risk really small and to let things play out over many repeated iterations. Somebody said gold has a +10 on EdgeFinder. And I just want to say, you got me really excited for nothing. Why'd you do that? Okay, thank you. Gold is +10 on EdgeFinder. I almost snapped over to gold so fast. No, gold is +0. And I actually agree with that. It could swing. So I talked about this earlier in the week, and I'll say it again here. We have a lot of volatility on this component of the EdgeFinder scoring here for the remainder of this week. Jobs data, right? We have a big jobs report tomorrow. We also have jobs data releasing in 4 minutes from now. The unemployment claims, right? Weekly jobless claims are coming out. So understand that scoring within EdgeFinder could be volatile in the next 2 days for things like gold. So let me just paint a picture. Let's say we have really bad jobs data. Dollar would get weaker scoring. Gold would start getting strong scoring. If we maintain upbeat jobs data as we have had recently, let me show you. If we go, where do I want to go? I want to go to economic data. I want to go to jobs market data. I want to go to NFP, right? So in the last jobs report, we had a significant beat. If you scroll down on this chart, if you have EdgeFinder, scroll down on the NFP chart, check this out. It actually shows the significance of the beat or miss. So the last jobs report, we had a significant beat, like the biggest beat that we've had going back a year ago to April of 2025. We had a big beat on jobs data. ADP, we really should add that chart to ADP too, because that's such a useful tool. We had a good ADP number yesterday, right? So we had good ADP numbers come out. Unemployment claims, we have another one coming out in just a few minutes. Forecast is coming in around 215K. If we look at the recent unemployment claims data, we've been beating expectations. Remember, with unemployment claims, you want lower unemployment claims. That is less people filing unemployment claims, right? So we want to continue, and that would be dollar bullish. That would be good for the state of the economy, et cetera. So we've had good data here recently for specifically the jobs market. That could all twist and turn in the last 2 days here of the week if you get suddenly some weakness in the labor market. Like, we've had a good streak. Let's see if we can hold it. Unemployment rate has also been coming down and beating expectations. Take a look at this. Unemployment claims coming down, or unemployment rates coming down. We went from 4.6 down to 4.3. So you have a win streak happening here for jobs data. And let's see if that continues. That's why I say, if you have Edge Finder, stay tuned. Friday morning, you could get some big shifts. We could see gold go bullish. We could also see dollar go bearish. Like, that could happen depending on how the data falls. It impacts our algorithm on how we score each of our assets, and it is one of the biggest events. Nasdaq is getting a +7. That's very interesting to me. Fundamental score getting a +4. I will say on NAS, I do agree with this. I like the fundamental score getting a +4. It's really solid with the recent jobs market bias, but I would again caution on, okay, we have a lot of volatility on this scoring coming in the next one day. Unemployment claims coming out soon. Hey, Marcel, if you need help with this, if you need getting your access restored to Edge Finder, if you purchased it a while ago and just need to get back into it, no worries. We'll drop a link here in the live stream chat. If you want to connect with someone on our support team, you can speak with them over live chat right away. If that would be easier for you, we'll just drop that link. Okay, so yeah, we've got gold here. Just about 5 seconds to go. Let's just see what we get in terms of unemployment claims, see if it does anything here this morning. Unemployment claims should be dropping any second now. Let's just see. Unemployment claims, okay, came in pretty much exactly in line with expectations. We did get 213,000 unemployment claims versus 215K expected. A very, very tiny beat in regards to unemployment claims. So that is going to be pretty much neutral to just a very tiny, slightly dollar bullish. So we'll see how that plays out. But again, dollar index, I've mentioned this. I kind of continue to think that we may be on the march back up to the top end of this range. I think 100 for the dollar index is very feasible. That would bring us back to the top end of this range. If you want to see a bigger break beyond that, you know, you'd probably need a good round of economic growth data, maybe really solid GDP numbers, et cetera. Guys, we're going to bring in Chris Pulver to the conversation. Of course, he is here with me to go over the unemployment claims, to discuss what is going on here in today's markets and setups happening now. We've got Nasdaq a little bit lower here, S&P down just a bit, Dow Jones is down, and actually Russell leading the down move here in U.S. markets. And then, of course, Japanese stocks continue to take on pressure. Oil's up 1.2%, let's call it. Hey, Chris, how's it going, man?
Good. Good morning.
What are your thoughts on this market today? Did you do some more premium selling yesterday?
You know it, dude.
Nice.
Yeah, actually, I'm looking at if anybody's interested in starting a little wheel strategy campaign trade. I'm going to look for another, kind of flare up in volatility. VIX is hanging out around 22 right now. I'm thinking like a 10% buffer, Nick, maybe going 10% lower, maybe out 30 to 60 days. What I'm trying to do is typically March seasonality is, between February, March, April, we usually see a bit of a pullback. This is why I've been patient this entire time, just selling lots of premium, like all the way below April 2025 lows. It's very safe in my opinion. So on my chart, I mean, I might be grasping at straws here with the technicals because clearly we're just going sideways. But inside of this recent structure the last couple of weeks, slightly lower high, slightly lower lows, and kind of cautious to the upside, maybe topping out around like 69.50 or so if we fail to get to 7,000. If we hit fresh lows, that's around that 67. What was that low on that wick? Like 20 something. What was that wick low? I'm showing a low at 10. 67.10 was our low. So we might just kind of in an orderly fashion maybe make some slightly lower lows, but that was a peak to trough around 4%. Nothing that's like screaming buy that dip, but that's 4.3%. So point is, if we do make some fresh lows, I'm still looking at this potential breakout around the 65.50 area. I have a couple of butterfly spreads running where if the market comes down here or the market breaks up here, these trades offer, I think I paid $115 for this trade, and it pays up to $48.85. So I could risk $100 to make almost $4,900. This one was $1.20, pays up to $48.80. So again, monster reward to risk trades. I don't think I'm going to get $5,000 out of my winner, but I think I could turn $115 into maybe $500 to $1,000 to cover, win one, lose one, or win one, lose one, and try to grab some, high reward, lowest profit. Yep. Back to the wheel strategy. I've been selling a lot of premium. I've been vocal about selling a lot of premium. If I could sell premium back around this like 61.50 zone, I'm kind of looking to target that as long as the premium is decent. I'd probably look at something that gets me, I don't know, maybe $300 to $500 every 2 to 4 weeks, something like that. Just kind of, if the market's going to churn, I want to at least get paid for it to do nothing. I want to monetize time. Does that make sense?
Yep. Chris, real quick, I got a break for this really generous donation. King of Kings with the $19.99. That's going towards the coffee fund, by the way, as always with those donations. Thanks so much. I appreciate that. Thank you for the live streams, Nick. I've learned a lot about macro these last 2 weeks. I've been coming regularly, and I've had the Edge Finder for 2 weeks, and I feel like this was the missing piece. Hashtag fundamentals matter. That is an awesome message. Thank you so much for that. Again, goes right towards the coffee fund here at the office. Appreciate that. Also, that is the whole point of these streams. Look, I've learned so much, not just from from Chris, of course, but from everyone who comes on the show. I mean, I listen to a lot of the live streams, even when I'm not on them, and it's just great to have the community that we do here. So thanks for the donation, and thanks to everybody for tuning in each day. I know a lot of you guys are here without fail every single day for the session. And if you're here for Chris and I, hey, we have a lot of fun. So thanks for being here. With that, Chris, yeah, I mean, let me just also clarify for listeners, when you say selling premium, for people who are maybe not so, into the options world, basically Chris is talking about, he's the market maker. So if you ever are scared or angry at the market maker, Chris is the market maker. So if you're ever mad, this is where you can direct your anger.
Right.
I'm just kidding. But he's of course selling, puts, selling calls. If you're making a directional bet, you might buy a call or buy a put. Chris is oftentimes making that less directional call by shorting puts or shorting calls, letting other people take the bet, and he kind of plays the house. And it is something that I also do. It sounds too good to be true, and it certainly is not. There's some difficulty with it for sure. It's not always easy, but you do kind of play market maker when you are on that side of the selling options world. Chris, I got a couple trades that I am playing here. I've been still thinking we have more room to the upside on the dollar index. I shorted the pound dollar again. I got back into, I had a nice little play, took pound dollar here to here, and then took a little extra stab here this morning, re-entering the short side of pound dollar. I think that we could see a continued flush. And I also think that there's some nice risk reward here, because the pound dollar, of course, a risk on currency pair. If you do get some concerning stuff happening in the Middle East. If that flares up once more, pound dollar, I think, is likely to continue to sink lower on that front. Any thoughts on dollar index here? We've had some good jobs data out of the United States recently. It's been an upbeat round of data. Of course, that could all end tomorrow with the NFP report.
I was just going to say that. I'm like, let's see what tomorrow brings us to see if that dollar, is going to have some runway to the upside. I still think that, maybe 100 handle would be reasonable. I mean, if we look at this recent structure, the run has been, up to this high. I think I said this yesterday on the show. I mean, we either stall out here and start to head back down for a higher low, and then, potentially hit that 101 handle or that 100 to 101 handle. That's if non-farm payroll is disappointing. But yeah, I mean, remember too, like if the dollar dips, I do think that's a good sign for equities. If the dollar rallies, I mean, it's, you don't always want to see like dollar strength, U.S. equity strength. I mean, did you see South Korea by chance?
I know we talked about it a little bit yesterday.
Yeah,
Did it do anything else?
EURGBP is South Korea. They just jumped up like, I mean, it's fading a little bit today, but this was up. So it's been down like 18% just in the last couple of days. As the geopolitical tensions rally, it was an 18.6% pullback. Just this morning, it was up, I think 12%. It's fading a little bit of that. So there could be some more pain. I mean, it's up, 9% in just today's candle, but fading a little bit. So, I mean, looks a little bit like, I don't know, gold and silver before we had a bit of a top. So, this is stuff that it's like, just kind of let dust settle. I mean, there's strong moving averages down here. Clearly, this is in an uptrend. I still think that the overall, like the world bid is pretty strong. I think that any chance to buy dips, if you're going to focus, on global ETFs or is it ACWX is the MIXI? Yeah. So here's the MIXI XUS. I mean, again, same thing. It's like we pulled back to the 50-day. If we settle back into like the 144 to 200 moving averages, I think these are good things to have in the portfolio. If you have an equity mix at all in 2026, I think this is a good allocation to have. So part of me is almost thinking if I went SPY, Qs is probably going to be my lightest allocation this year as far as holding. Dow I really like just because it's lower volatility. Russell, small caps, mid caps, I'm pretty strong in the outperformance of small caps, mid caps in the US markets. And then global. So pretty much there's ways to trade global. You can do this ticker that I just posted, the ACWX. We've talked about SCHY. That's also non-US. It's heavily rooted. SCHY is a lot of Asia and a lot of Europe, mostly Europe. But some there's Australia, there's India, there's other stuff too. I know that you're in INDA. Trying to think what other EWJ is just Japan. EWZ, we talked about Brazil and Latin America.
Your ILF.
It's just a mix. Yeah, ILF is Latin America. It's just a mix. So, I mean, this is a way to participate just in these two right here, ACWX and SCHY. That is basically a global mix. So if you just want to keep it very simple, those aren't terribly expensive. SCHY is like $30. ACWX is $70. I mean, these are much cheaper than buying, the SPY at $690, the Qs at 4 and change. I guess Qs are up to what? 600. I'm way off there. I'm thinking of those April lows so much because I've been selling so many freaking puts around those. Anyway, but it's just, they're cheaper. They're cheaper. That's it. I'm not saying that they're guaranteed, value plays because the world has been underperforming for a decade plus. And all it takes is one, bout of risk off like we saw this last week. And you can see that these things just snap back and like, oh crap, it's too good to be true. But anyway, I still think there's a bid that's going to stay there as things kind of get flushed out. And the U.S. markets are, by historical standpoints, pretty overvalued.
Yeah, and maybe one thing to kind of bring our dollar analysis into that again, we can kind of talk about like, okay, if we start getting up into the top end of this range in the dollar, we know there is sort of that inverse correlation with dollar index to global equities. So if you're, looking at non-US stocks, typically, a weaker dollar is going to be, a stronger case for that, right? So we saw that last year. We've seen it spill into this year. So maybe if you're thinking like, okay, I want a time looking at some indices globally, maybe we're looking at kind of a top end of the range for the dollar index, which could be a nice time to, because you're seeing it, right? As the dollar strengthens, a lot of times that's going to also be negative on international stocks as well. So we'll continue to monitor that. Chris, here's a quick little round of our, we do our sentiment each week. We did get some new AAII investor sentiment survey data. Of course, for newer listeners, basically what this is showing you is it's showing you the weekly poll run by the American Association of Individual Investors, and it asks people basically, do you feel bullish, bearish, or neutral on the stock market out 6 months from now? Now, it's useful because when you can see crowd sentiment getting extreme, we've actually done some studies, and it's actually in Edgefinder. We've built a little tool for this, studying historical performance of the stock market following an extreme reading like this. It's not, I guess it's not super extreme right now, but it does generally show in our studies that a lower bullish rating is actually, like, when people are feeling more pessimistic on the market, it is a contrarian signal to be more bullish, and vice versa. Interestingly, you can see pretty much the market was topping out as crowd sentiment was getting the most bullish it had been. And I don't think that's coincidence. I think that, people start bidding things up. They start buying into stocks. They feel really confident on it, usually at times that are not necessarily the best times to be doing so, near all-time highs. So we have seen the market back off a little bit. And with it too, sentiment has gone much more neutral to slightly bearish leaning, as this thing does historically have a little bit more bullishness than bearishness. People typically over a long term are a little bit more positive on stocks, but right now we actually see bearishness at a higher level than bullishness. We also, if we scroll down here, we can take a look at our bullish sentiment over time. Bullish sentiment has been on the decline. Bearish sentiment has been on the incline. We do see crowd sentiment still a little bit pessimistic. That tells me why, or that tells me at least, that you could have at some point here a pop that actually, climbs that wall of worry, Chris, because again, we don't see, I would be less intrigued by potential buy the dip opportunities in certain parts of the market if this thing was still, right here, right? If everyone's still bulled up, that would make me a little bit more cautious. But because we have a little bit of pessimism, you very well could get, maybe a breakout that actually lasts. I think if you still have pessimism near all-time highs, which has happened a few times in recent years, it's actually been a really solid indicator all through 2024 and 2025. That was a really good signal, was when pessimism was still there at an all-time high. It was like we just drove through that.
Yeah, I agree. Man, sentiment is such a wild roller coaster this year. The AI is still, I kind of like seeing that the bears are kind of creeping up again, because that just means, like, the pain trade, as you and I talked a lot about last year, the pain trade is just a little higher, a little higher, a little higher. People think that it just can't possibly go this much higher, but it is. I'm sure you caught a segment with Tom Lee this week that he was talking about, this looks like a bottom, just because of the dispersion trade, just because of the churning that's been happening, while there's been very little disruption on the index side. Nick, while we're talking here, I'm finding a trade that I'm liking. I'm going to put in a little fancy ratio spread right here. I'll take this trade this morning. So market opens in about 45 minutes. I'm looking at the DIA, taking something that's going to be a 465 by 455. That should be worth about 5 to 550 in credit. So basically, if the Dow stays from peak to trough, let me measure that out. So if we go from high to low, if the market on the Dow can stay at least 10% from the highs, there's a solid income play there for maybe 45 to 60 days. I'm going to choose the Dow because it's a little bit cheaper. I like this. I like the SPY, but I looked at the RSP. The options are garbage on RSP, which is equal weight. So this is going to be where I'm kind of starting this wheel strategy, but I'm going to do it with a little bit fancier take called the ratio spread, which is one of my favorite things. That gives me a little profit trap of maybe even $1,000. So we could turn like a $5 credit into maybe up to $1,500, and still be willing to take ownership of an index at a really good discount. I'd probably own this thing if I did the math here. Sorry, I'm getting nerdy this morning, but 455 minus 10 minus 5 and change. Let's go $5. I'd own it at 440. And that ownership would be, maybe in the middle or late part of May. What was it? 440. So 440 would be a discount of about 13% on the Dow. I take a stab at it. I could repair that. I could wheel that thing into profit, most likely with some type of reflexive bounce.
There you go. So, another market, just to talk about possibly the most interesting chart of the week, I would still say, is still oil. In terms of latest updates, things are still going down in the Middle East. There has been at least part of the rollover in oil that we saw, at least initially, was this idea that in some way the U.S. was going to ensure oil flow through the Strait of Hormuz. Of course, there's also this weird kind of the U.S. military, how effective are they being at bringing this to a quick close. If you remember, though, when we talked about Russia, Ukraine, the expectation was, hey, or not the expectation, but a lot of people were saying, hey, it's going to be a real quick thing, and it's still ongoing. So these things sometimes appear like they could be a quick thing, but I don't know that is necessarily a foregone conclusion. We see oil maintain that bid here. I mean, we're pretty close back to those highs, that we were a couple days ago. So oil remains bid, and I think that the longer we
are you back in? Are you back in oil? Are you back in?
No, I took profits on it.
I'm waiting for a dip myself. I don't know if you've heard the phrase, buy when missiles fly and sell when you hear the peace bell. I don't know how long this lasts. I don't think this is a good look for the current administration, unless they spin this into some type of weird like power play but I mean, look at what's doing to oil. I mean, this is probably the most obvious thing for US, the US economy for like pay at the pump. I know that, most of what's going on in the Strait of Hormuz is Asia oil. Like that's what's being affected by it. But as far as global trade, I mean, it's a big deal. I think, isn't it 20% of the world oil supply goes through this strait? And it's a massive bottleneck. So I don't know. I mean, does it matter, dude? I mean, it's a terrible conflict, but it's like, how long has the Middle East been a hot spot? As long I'm 43 years old. It's been ever since I can remember. There's always been something. So again, it sucks that it's 2025 and we're still going to war and whatever. I don't know what happens to it, but I would like to see a dip on. I mean, as a trader, it's like, let's see some dips, but I don't think this is a reason to, if the market can absorb this along with everything else, it's hard to see a bear case. Again, it's like unbelievable how this market could just climb, or just churn, despite like literally stacking up all these negative things, just because like there is still just like support and risk appetite for these markets to go up.
Yeah, I mean, you've got to look at when you look at the NAS or the SPY. I mean, the amount of times that you get something, it's like, whoa, that's going to be it. And then it's like, boom, the market just finds a way to rip the next day. It is really, truly impressive, just kind of showing the resiliency of the consistent buyer that is in there, just bidding up this market every time it comes down. I mean, you're talking about throughout all this peak to trough drawdown in the last 6 months, about 9.3% on the Nasdaq. S&P 500 hasn't seen more than recently a 4.42% drawdown. It's very impressive.
Crazy, right?
Resiliency of this market. Of course, we've talked about the dispersion trade. You have different parts of the market that are doing not as good, whereas other parts are doing much better. Chris, gold and silver have been confusing people quite a bit. We talked about this yesterday, right?
Yeah.
Of course, you have this. I think my big claim on it is I think you had a lot of margin call stuff that went on when you had the VIX spike by 30% in a day, and probably a little profit taking just to kind of raise cash in that circumstance. That was my best guess as to exactly why gold is lower. But again, the first reaction to a gold or a breakout of war in the Middle East, you may not have expected gold to come down in response to it. But I would chalk it up to taking profits on what has been a strong up move prior to this. I think the market kind of saw something coming down when you had militaries around the world kind of moving into the region. So, we'll continue to see how this plays out. But is this do you think it's a buyable dip here, Chris? I mean, I know you talked about the longer term, if we were to get some 200-day moving average, moves, but is this the sort of environment where we could see gold back above the all-time highs in short order?
I mean, sure. And this is why I'm still running. So, CEF and PHYS are my ways to have some of my exposure. I'm still waiting on, GLD is a little bit more expensive. SLB is more expensive. Trading, futures is like, I don't really mess around with unless I'm going to scalp on futures, I'm not really messing around with position trading. So if I'm going to position trade, it's GLD, SLV. I'm still taking, stabs at those right now. I just, I mean, for the 200-day moving average, that has kept me in trends for a long time and also kept me out of a most likely consolidation or correction.
Mm.
And at 600 plus bars, I can't find another time in history outside of 2009 to 2011 that gold did this. And it's like, I just think it's going to come down. And I know that that is going to be like bass backwards for everyone that thinks that gold is just the greatest, to 7,000 target, stuff like that. And that's fine. I want to be long gold. I am long gold. But as far as building the position to the degree that I want to build it, I can't buy these levels at the size that I want. So this is why I'm trying to be patient. I'm hoping that a patient trader and investor could be rewarded for something like this on the technical side. But look, I'll bring this to the table tomorrow, Nick. I have a report here. One of the guys that I work with that is basically exclusive, like gold, silver commodity trader, put together this pretty nice report. So I'm going to digest. He just sent it to me this morning. So I'm going to digest this. This got some, world change the world order, Dalio stuff. There's some big cycles on the markets with, where we're at right now would be your kind of your financial bubble, big wealth gap before we turn into like the, financial stress or economic downturn. And then we go into the print phase, which is like the kitchen sink and all these things kind of, that's Ray Dalio stuff that he's been talking about the last couple of years. Anyway, I'll brush up on that and bring some fresh insight to, gold. I don't think gold and silver are terrible investments at all. It's pretty safe to throw some money at it and walk away for maybe the next 2, 3, 5 years and expect it to be higher. So from that standpoint, I'm pretty price insensitive to it. But as far as wanting a little bit of precision in how I'm going to invest in it to the percentage that I want, I have to be patient. And hopefully we are going to retest like, 4,400 or slightly lower. I've got the symmetry measure down to about 42 and change. That's where I want to buy. And that's what I'm going to wait for. What's that?
I got a trade idea I want to share with the class here real quick. I'm looking at Bitcoin for actually a long trade. Have not had any conviction in Bitcoin to take a position in quite some time. But let me explain a little bit as to why. From a technical perspective, I've been impressed with the relative strength of Bitcoin here recently. Given that you have global equities getting nailed here amidst all this stuff, I mean, barring the US, just the permanent resilient one. But, you've had Asian stock markets down lower, and you've seen a response to what's happening in the Middle East. And yet, during that same period of time, Bitcoin has actually moved higher. It's been pretty impressive, to say the least, to see that relative strength. And I'm a momentum trader, so this is something that I'm looking at. When I love to look at, here's a quick tip for the audience. On a flush down day, look at things that are down the least or positive. That is a relative strength indicator that I really like. And so we've had these flushes to the downside, and yet Bitcoin is showing a bid. I can't put my thumb on exactly why. I'm not a hodler for life or anything of that nature personally, nothing against people who are, but I'm a trader. And so when I look at that relative strength, I look at that and I say, okay, there might actually be some decent risk reward if we do see a de-escalation type environment. Maybe that relative strength in Bitcoin could explode on an up day for everything. So we saw it yesterday and the day before. We had Bitcoin up 7%. I'm not ready to buy it at these levels, but let me just add a little bit of context. Part of the reason I'm getting flagged down in terms of my score going from not, it could be at like 8 or 9 right now, is that we have some sentiment data that's not so hot. And specifically, this brings my attention over to the put call ratio, which shows that there has been a big surge in call buying. No surprise there, as you had the big up 8% day yesterday on Bitcoin. So here's how I'll play this. My lineup for this would be wait for this to cool off. If Bitcoin can pull back down on the 4-hour timeline, maybe into the 50% to 61.8% retracement, that's a swing trade for me that I think has decent risk reward. I'd put a stop on it. I'd be looking for momentum to continue, and I'd be out of there quick as possible if it did not work out. So again, not an investment, not a buy and hold forever for me on Bitcoin, but rather a trade setup that I think is backed by relative strength from the technicals. The macro here recently in the US has been decent. You've had some decent jobs data. Inflation's, not great, but not horrible. We had a good CPI print. So that just wanted to lay that out as a trade idea and, my thought process on that one. So I am liking the technicals here on Bitcoin.
Yeah, I like it. That 60K mark is pretty solid. I would expect a little bit of chop from here. I mean, maybe up a little bit, maybe pulling back like you want. I would be targeting. So if I'm bullish on Bitcoin, I like kind of the 85 to 90 handle to be safe. If we get into the 95 to even maybe even testing 100,000, be very careful trusting 100K breakout all the way back to fresh all-time highs. I think that if anything, this is what I see on the bigger picture. And this is not a fun, like I have Bitcoin. I like Bitcoin. This is not a fun forecast, but this is what I see technically. To me, this is a pullback into about 95 to 100K. That is a flat pattern. And then we head down to symmetry to about 40 to 30K. And that's where the better buy to all-time highs and then some lasts. I don't know what the timeline is here. This might be a 6 to 12 month window. But that's kind of my outlook is, as Bitcoin is falling, I was selling lots of covered calls. My cost basis is below this low, which I'm thankful for. So I'm going to probably take a lot of my profit off the table and limit most of the Bitcoin exposure through this, and then look to load back up at 60K to 30K and kind of dollar cost average back in if I'm right on this. And then of course, try to take that run back to all-time highs. That would be, we're going to be pretty stoked to have, maybe a 2 to 3x run on Bitcoin. So if we ever run back to, 90 to 100K, just saying, be cautious on those gains, enjoy them, because I think we can still turn and go one bigger leg lower.
Guys in the chat, real quick question for you. Give us just a weigh in from the community here. Are you guys bullish or bearish on Bitcoin long term? Not talking about a trade. I'm not talking about the next day or two or the next 3 weeks. I'm talking about like long term. Would you allocate personally, not financial advice, would you personally allocate any money to just sit if you already have it or you're considering it, or you would if it goes down? Long term, let's say 2 years plus. Bitcoin, bullish or bearish? Let us know in the chat. I'm just curious. I've been seeing, I got to say this. I think that I have been skeptical and cautious around Bitcoin for a very long time, but the asymmetric risk reward profile of Bitcoin is something that I am interested in. And recently you're starting to see the know-it-all bears coming out of the woodworks hard on Bitcoin. I've seen the story of crypto is dead because we hit all the milestones and now it is completely Wall Street owned. It's an ETF. And, everyone who touches Bitcoin is only interested in the greater fool theory. Nobody actually believes in Bitcoin. Everybody wants to buy Bitcoin so that they can sell it to a greater fool later for a profit. It is bear city out there for crypto. And understand, this is coming from somebody, I'm just pointing this out as somebody I'm just never been a huge believer. I like stocks. They're tangible to me. I can understand that they make profits. They yield something. I get it. And I can understand gold because that has a 5,000-year track record. Bitcoin's been always hard for me. I've loved trading it over the years. But Chris, what do you think? Is it losing? Do you think there's merit to that? Hey, it might be losing some of that long-term edge that the underdog story is gone, right? I mean, we have a crypto president, for goodness sake, right? Is that underdog status, is that enough to kill Bitcoin? Is the story dead?
I mean, it's not dead. I still think it's just, unfortunately, it's just a wait and see. I think it could be, like you said, the asymmetry is what attracted me to it in the first place. I have treated it a lot more like a trade than like a hold forever type situation. I think there's a time and a place to have it. I think that the asymmetry can't be ignored. I mean, basically for whatever money I put into Bitcoin, if it goes to zero, I have to be willing to part ways with that risk capital. But if it goes to 250,000, 500,000, $1 million, it's like, why would you not take that potential trade? I mean, why would you not? So, 10 grand to turn into 100, or I'm sorry, 10 grand to turn into 100 grand, or 100 grand turn into $1 million. It's like, why would you not consider that as an allocation? And so that's what it's been for me. It's still been a trade. What I don't love about Bitcoin just recently is because, it's been financialized a lot heavier with IBIT, FBTC, all of the ETFs that are now tracking the spot price of Bitcoin. What Michael Saylor's done with financial engineering, with MicroStrategy or Strategy, what Tom Lee's doing with Ethereum, like putting debt and raising debt around these instruments to just, hey, we're going to raise debt to buy more Bitcoin. Well, that's backfired a little bit because Strategy, it became like a 2 to 3x leverage proxy, and it's down 80% while Bitcoin's down 50%. That's a sucky tool, if you ask me. It's just the market. I mean, I think that's where Wall Street, did grab control of things, and like, we will forcefully push somebody to the brink of extinction in order for them to like maybe sell off some of their parcels of Bitcoin, because that's essentially what MicroStrategy has become. So there's a lot of gamesmanship going on in the space, and that's what I haven't really loved. And the fact that it is tied risk appetite a little bit. I mean, here we talked about this actually. I think one good trade for this year is to see if this starts to separate. This is BTC against software, so the IGV that did catch a bid this last week or so.
Yep.
If I start to see that BTC is outperforming, I think that's a good sign that Bitcoin is going to have some relative strength compared to, you know, tech really. And maybe it kind of stands on its own 2 feet again versus being basically with Bitcoin topping out. It's like it rolled over hard from October last year to now, and it's still kind of finding its footing. So if Bitcoin gets a bid while, you know, software disruption maybe still happens in the AI space, this to me is maybe a sign of like, okay, I could get my head around maybe Bitcoin getting that rally like we talked about. But again, you've got to expect it to go to zero. I'm not saying it's going to, but I'm saying that you have to trade it like if it goes to zero, I'm still going to show up and trade the next day. I'm still going to have a portfolio to invest in. I cannot be all in on Bitcoin because I don't know what the future looks like. And I don't think anybody does. And so that's what's so crazy. It's very polarizing. You're either all in, you know, you've read Jeff Booth, Price of Tomorrow, you're, you know, orange pill, blue pill, red pill, whatever it is, and you're bullish to the max, or you think it's the biggest freaking Ponzi scheme in the world. And it's just, there's no like common sense to it. And that's what makes it so interesting, but also so crazy.
I think there is room for someone like me in the middle ground. If it gets trashed down enough, let's say the market, let's just say the Sailor thing blows up and we have massive forced selling. I'd probably step in there and buy just a little bit. And again, to your point, except that it could go to absolute zero. Whatever I put in there could go to zero, but it could also 20x. And so the asymmetric return potential is something that, again, I'm not necessarily a big believer in the thing forever, but there are, you know, decently asymmetric return bets that could be made. Chris, we're out of time. Thanks as always for coming on and sharing your thoughts and opinions on everything. Fascinating conversation as always. And we will see you back tomorrow, right?
Yeah, sounds good. See you.
All right. See you, Chris.
All right.
All right, guys. Up next, we are going on over to our next show host. You guys know him and love him, Miko Audu. He is a highly technical trader, and we'll be going through several different Forex pairs and other indices, commodities, etc. here. I always like listening to his session because if you're interested in kind of a rapid fire, lots of charts and kind of straight to the point, Miko is your guy for that. Guys, our VIP sale is coming to a close tomorrow. We're currently doing a VIP 40% off discount. If you're interested in coming and trading with the team here at A1 Trading, if you want to get notified anytime a new position is taken in real time so you don't have to sit around and hope that gets talked about on stream, the best way to do that is to join the Discord. We'll leave a link in the live stream chat here to where you can speak directly to a member of our support staff if you're interested in taking advantage of that discount. Up next, we have Miko Audu. Don't go anywhere. It's coming in just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned. Should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Okay, what's up, people? Hope everyone is doing good. Glad to be back. As always, just keep it simple. We'll go through a bunch of markets, some of which I'm looking at, some which I'm not a big fan of, and of course I'll explain why. If there's any particular markets, instruments you're looking at, particular time frames as well for those same instruments, let me know, put it in the chat. I'll be happy to take a look. But it's been an interesting week. Coming into the week, I was quite focused on gold. Momentum's picked up recently. We broke through highs recently as well. I was looking to see what type of pullbacks could we get. Of course, there's a lot of volatility with this instrument at the moment, so it's very interesting to see how price reacts to everything. But my bias has been pretty bullish. not only fundamentally, but in terms of the market structure, in terms of price action, which again is my main focus. As long as the technicals do replicate that bias, as long as the technicals do agree, I'm happy to participate. But of course, we had a really aggressive start to the week from a bearish standpoint, really put a really strong push down. Now, that's not really what I wanted to see. Now, because when gold does come into that kind of bull cycle, that exponential trend, we do pick up momentum quite well. We don't really want to see these exaggerated pullbacks, although if they do happen, doesn't necessarily mean I'm not bullish or not in the bull cycle. It just means you have to be a bit more patient with entries. So what I was looking for coming into the week was just simply a retest of the high, because momentum's picked up quite well. We broke out of that range. We broke the high very quickly. And of course, if we stayed above that, I'm expecting momentum to continue, and the all-time high becomes an area I'll be looking to target. To be honest, I'll be looking to trail stops. But yeah, that was the plan. But of course, we've had this recent momentum. Price has pushed down, and since then, price has been pretty flat. We're just consolidating. So the bias is still bullish. Again, I'm still looking at the key swing points. If I map them out since we had that big collapse not too long ago, you can see we're still maintaining that. Although we have broken through this low here. I wouldn't say that's very significant in terms of direction. It does tell a story, but for me, this is the low which I want to say stay protected. If price was to go and break through that, then I would very much lose that bullish bias, especially from a technical standpoint, and especially in the 4-hour chart for gold. As long as we stay above this low, I still remain a wannabe buyer. So I'm looking for long opportunities, but because of this aggressive move, I want price to kind of stabilize first. We're coming into this area, which is like a big area of demand. Essentially, I want to see evidence that buyers are finding support here. We've already seen evidence slightly, or the first sign of evidence forming, but I want that to mature a little bit more before I do jump into any buys. In particular, I want to see evidence of us breaking highs here with some strength, and then that will be my signal to start looking for entries again. And the plan will be to take it to that high, and then hopefully we got the all-time highs as well. But of course, things can change. For example, if we consolidate and then expand lower again, that's not really what I want to see. Again, not that we can't go bullish later on, but the whole point of this momentum is that we're supposed to be picking up momentum. And if that starts to lose, starts to fade, starts to become equal in terms of buyers and sellers, then we're kind of losing that edge. And at that point, I don't really want to get involved. So it's important that gold finds its feet pretty quickly, momentum picks up pretty quickly too, and then the buys kind of create themselves more or less, and they'll be looking for retests back to highs and all-time highs. I don't like silver. I was keeping an eye on silver as well. I do like looking at both of them simultaneously because they both kind of tell the same story essentially. I mean, the metals do, when they're in that bull cycle, they all kind of go together, and then it's about just picking the better one. In this situation, silver doesn't look good at all. I said over on my channel, the main focus with silver is what we do at this high, which is why I like gold, because gold broke this this corresponding high on gold's chart, and we just kept pushing. Whereas silver, we broke the high, then we collapsed straight back below. Essentially, this is looking more like a range for silver. Now, again, long term, I'm still very much, I want to be buyer for silver. I do expect higher prices, but at the end of the day, the technicals are going to invite me to the trade, or they're not. And at the moment, they're definitely not. We've had this big collapse, and since then, buyers haven't really shown much force. Sellers are doing a pretty good job at resistance, and this is a range. So, but it does make things clear in terms of what will allow me to be to become a buyer. If we can break above the range again and sustain that, then I'm interested, because now we've kind of found our feet, and now momentum is picking up again, and I'm happy to look for pullbacks and longs. Yes, potentially this could be a pullback for another push. You could argue these are higher lows, but it's all very flat, and I'm not really seeing a clear sign to say that buyers are really coming back into play. We're not in this exponential cycle. This is a different regime, a different condition for silver, and looking to be an aggressive buyer, I think is slightly flawed with how price is moving. So I'm being very patient with silver. Gold looks a lot better, so my focus is there, but silver not really doing its part as well. So I'm being a bit more cautious and making sure that momentum's truly back in the market before I do start to look for buys. And of course, if you just see price roll over, then yeah, we've got a textbook range on our hands, and then we'll see which way it breaks out. Don't really want to be so much of a predictor, because we could break lower, and that's information as well. We'll go through some Forex currency. We'll go through some USD majors. First, I'll take a look at the DXY just to get the overall picture of the dollar, which is always useful. To be honest, it has not been very useful because we've just been in a range. But to be honest, it's given us our parameters very, very clear. We know what defines the high of the range, what defines the low, more or less around 96.5, more or less around 100. And those are our key levels on the daily chart. Should we break out of them, that's hopefully when momentum truly picks up. A big mistake a lot of people do is they see momentum here, these two, nice bullish daily candles, and think, okay, we're trending, let's just look for longs. Yes, intraday, that makes sense, but you want to keep it short term. This momentum doesn't really mean anything in the grand scheme of things. I would not be getting carried away that we're shooting to the moon, again, from a technical standpoint at least. This is just momentum within the range, which I just classify as fluctuation, noise, just the micro imbalances we see in the market. So I wouldn't get excited with that, especially when we're pushing into some resistance just above our heads as well. So really, dollar, if I'm going to trade it, I need to scale down hourly and below. I don't want to stay in trades too long because direction isn't clear. If direction is clear, like for example, momentum's falling, momentum's very bearish and we're breaking consistent lows, lower highs, we're seeing force, direction is clear. I don't mind holding trades. Here, unless I'm positioned around these areas, then of course you can make some sense with holding trades from those areas, because those are true areas of value. But in here, you want to keep it short and sweet. At least that's how I view the market anyway. But USD has been bullish the past couple of days, and of course we have seen signs of that on the USD, on USD major pairs. Pound USD has been falling, and again, Pound USD is in a range of itself. You can see clearly the highs, clearly the lows. So what's the opportunity here? Well, it depends what time horizon you're looking to operate in. If you're looking for swing trades that could last maybe a couple of weeks or a week at least, looking for opportunities around the 1.32 for mean reversion plays, looking for rejection is a smart play, or even a breakout as well. That could be a nice trending opportunity. If you're looking for intraday opportunities, it does become quite messy. Yes, momentum is quite bearish. I was actually looking for shorts coming into the week for pound, but we kind of just fell out of the sky there, so I didn't actually get an opportunity to find entries. I was looking around this area last week, didn't quite get the confirmation, so I was hoping we could revisit, but we started off pretty bearish then, which kept falling since. So Pound USD is bearish on the lower time frames, and I do like that narrative because we have been falling for quite a while. But we do have some noise to our left, and we're in that range, so I kind of want price to give me a better discount, a better price before I do look for any short opportunities as well. And all I'm looking to do is just continue that momentum on the short term, and then we'll see if we can look for some longs here or some breakouts, etc. We'll study price when it gets there. Euro USD has been very, very similar to pound in terms of the price action. I mean, they usually are anyway. This one was a lot more violent, of course. Really strong push down at the start of the week. No real opportunity to get involved unless you kind of shorted on the open there. Now we're coming to an interesting area. I said Pound USD is consolidating. Euro is kind of doing the same thing, but at a slight slant. So of course we got this ascending channel taking shape quite nicely. So we're at a very interesting crossroad here for Euro. I like where we are right now because it's make or break. If we do break through this, now I'm not expecting a huge sell-off and us to completely fall. Of course that could happen. It would be nice if that was to happen as well. But what I would say is this is clearly where price has been respecting quite a lot. So we could find support here. This could be another low, and we could see some upside. And even if a move happens that we see price return to this area, that's a pretty big move, especially if you can drop to a lower time frame to take advantage of that. So that scope is pretty bullish. But of course, with USD looking quite strong right now and what's happening globally, we'll wait for confirmation, wait for the technicals to support that narrative, which at the moment they are. We were seeing multiple wicks and prices still holding. If we were to break through, of course, that'll put an end to that bullish bias, and at that point we're looking at this low and this low here as well. So I like what Euro USD is doing because it's at a crossroad. The bias is pretty simple. Stay above it, reject it well, bullish, break below, bearish. it makes decisions quite clear, and you've got a solid base to back it, especially if things change. For example, if we do break below and then recover, well, you know that's likely a fake out. That then allows a bullish bias to take charge. So euro is at a very interesting place, crossroad. I would say keep a close eye on euro. Again, looking at the lower time frames, I wouldn't say I'm necessarily expecting price to break or hold just yet. It's still quite early. I say that because we had a really big sell-off there, so there's a lot of momentum. So I'm going to need a little bit more to justify buys. If we were falling quite correctively in slow pace, then I would say that's probably enough for me to take a trade. But because we had a lot of force there, I don't want to jump into a falling knife just yet. I kind of want to see a bit more evidence there. And of course, if you break out, then I will forget about that bullish bias for now. So euro is quite interesting. Keep an eye around that area, 1.16. It pretty much lines up with this support level here as well. So it's a nice kind of inflection point. We'll see what price does there. In terms of some other USD pairs, dollar yen's an interesting one. I still quite like the yen pairs. I spoke a lot about them on this stream last week. I said I'm looking at pound yen. I'm looking at pound yen. We can go through that in a moment. It's a little bit messy, pound yen, but the buy still stands. So dollar yen's quite interesting because, again, we're back at resistance. USD is quite bullish still. Yen is quite bearish generally still as well. Well, up on the day, and price is deciding whether it's going to break or hold at that resistance level. Now, I am still quite bullish on the yen pair, so I'm still looking for buying opportunities. I'm not looking to sell them across the board. I'm quite bullish. I have my favorites, which we can go into. But dollar yen isn't my favorite to buy, to be honest, particularly because of where we're trading. I don't really feel comfortable buying directly into that. There is room to the upside should we manage to break above the level we're trading. There is room for us to push into, so that becomes interesting, but that's not confirmed yet. I can see momentum's picked up very well. Really nice 4-hour candle close there. But equally, we could just roll over in the next few candles as well. So I want to see evidence of us breaking highs, and then 159, 159.5 looks quite likely. So there could be some buys there. Keep an eye on that momentum, particularly if we can get above that prior high at 158. I do think there's some nice room to the upside. Like I said, pound yen is my favorite just because structure is really well defined. And momentum on the higher time frames is well defined as well. You can see dollar yen's a little bit choppy. If I expand to the weekly chart here for pound yen, anyone can show that this is a bullish trend. So when things are quite clear like that, you don't really have to second guess what the trend is, what price is doing. Normally that's the better markets to be trading. So essentially what I'm looking at for pound yen is this is a range here to our left, and price found resistance support quite well. Then we had the breakout a few weeks back. Price spent a few days below. We broke back above, broke back below. So it's been a bit awkward. The question I'm looking to see if price can answer is whether we are trying to stay above this, which I think we are, or is price actually going to break back below it. Now, if we stay above this, that's the trade I'm looking for. Because if we can stay above this, then I'm expecting a push back to the resistance. I'm expecting this to be the new swing low, new higher low. So if you look at the previous price action, there's your low, there's your low, there's your low. I'm looking at that being the next one. And if price can stay above that level, that for me is my confirmation. And then I will drop to the 4-hour chart for entries. And the reason why I like it as well is because I got a pretty decent range to work with. If I can find an entry somewhere in this area and a stop loss somewhere below, that's a 1 to 2, 1 to 3, potentially even more if we do get a push back to the highs. And I don't need price to necessarily get there. I can start taking some profits, lock in some gains before that as well. So keep an eye on pound yen. Pound yen's my favorite out of the yen pairs, but I'm quite bullish across the board. Okay, let me look. Okay, I'm seeing euro pound as well. I can take a look at euro pound. Euro pound's not my favorite pair, but I can definitely give that a little look over. I haven't actually been tracking euro pound at all this week, so this is all new to me. Well, it's not new to me. Only this price action is new to me. I've been looking at euro pound for quite a while. But yeah, okay. So we're bearish on the week. Okay, of course, makes sense. Pound has been weaker than euro. Euro's been weaker than pound. So yeah, in terms of euro pound, very messy, but I do like the area we're trading in. Reason being, it's a very, very solid level of resistance, and price has been reacting quite well. Not perfect, but essentially there's your point, there's your second point, there's your third, this is your breakout. Price tries to continue, try to see some bullish momentum. Of course, in hindsight, we can see that failed, and now price is back at that same inflection point. So clearly this is a price that euro pound is paying a lot of attention to. Buyers and sellers are having a good time there. This is the weekly chart, by the way. So if price can respect that level, I'm simply looking at a push back to support. Just keeping it very simple. If we can't break this area, we're going back to the area which sent us there, most likely. And that would be around 0.865. So we've got some nice trajectory to look into. Of course, the week's price action is not over yet. We've still got the rest of today and tomorrow. So that candle could look very different, but momentum looks pretty bearish there. So for euro pound, I would be looking at some sells. In terms of location for entry, this is where it gets quite tricky now, because bias is one thing, entry and stop loss is completely different, because you could have the correct bias, but just because of pure execution, you miss the move and you potentially even walk away with a loss, even though you were correct with your prediction there. So in terms of entries, I would only feel comfortable if I can find some entries in and around this area. I don't have to get a stop loss above this high. Preferably that would be the best place. That would give myself the most room, give my trade the most room to actually play out. But of course, that would probably sabotage my risk reward. So I would want a stop loss somewhere above the highs over here. That would be a little bit too conservative to me. This will allow me to still have a relatively safe stop and of course maximize my risk reward as well. So essentially for euro pound, I would want something like this, entries around there, and then a push back to where we came from. And then if things go very well, then a push to the support level I mentioned on the weekly chart, anywhere in this area here. So yeah, euro pound, very bearish bias. It's a very choppy pair, so you don't want to trade momentum here. Momentum's the worst play typically with euro pound, because it just rotates back and forth. So you want to be selling high, you want to be buying low. And if you're selling high, you want to take your profit low, vice versa. So I would refrain from looking at any momentum plays. Not the best pair for it, not the best conditions either. There's a time and a place sometimes for euro pound, but this is definitely not it. So I would wait for a bigger correction, and then shorts make sense. Otherwise, I'll leave the pair alone. But I like where we're trading. I like how we're reacting to. You can see price has had some very violent wicks, aggressive behavior above it. That will kind of take out some early participants. So potentially now we might see the move. So let's see if we can revisit. I'll go through some indices, because I do actually like what, I was going to say I do like what the indices are doing. I don't like what the indices are doing. But they are interesting, particularly US 30. I'll start with NAS. NAS is probably the worst out of the bunch, to be honest. Just keep it simple here. I'm looking at this as a range. You got your lows, you got your highs. Keep it simple. Many people try to look at the chart trying to come up with an opportunity. Sometimes there just isn't one there. Particularly in an index, US index like Nasdaq, I keep it very simple. When we're in situations like this, you're looking to buy. Of course, where you find your entry, where you put your stop, how you trade it, that's up to you. But it's just very simple. When a bull cycle, the market's trending up, let's not overcomplicate it. But clearly, we're not in that same cycle anymore. This is clearly a different phase to what we were doing over here. So we've got to treat it differently. And the best way to trade opportunities like this is buying as low as possible. Not in here. In here is where you're going to lose. Again, you could still make some profit there, who knows, but I know if I'm trading there, I'm not setting myself up for to really take advantage of the conditions here. I want to be buying as low as possible, which would mean buying in this kind of area. I don't even want to be looking to sell, to be honest. Maybe if we start trending below that, I'll think about selling, but to be honest, I'm still very much want to be a buyer. So with Nasdaq, 24K, very pivotal level. We can see prices reacted a couple of times. Let's see if we can get there again. I know this is the daily chart. That could still take a few days for us to get there, but patience does pay in the markets, and I wouldn't want to try and do too much there. I know people will be looking on the lower time frames, trying to find some opportunities here. It's going to be difficult. Yeah, I would refrain from that. US 30, like I said, looks a bit more interesting. Reason being, it looks like the market is slowly picking up momentum lower. And it looks like we've broken out of this bullish phase as well. You've got this long-term bullish trend, which has been very, very nice, trending very, very well, exponentially. Well, not exponentially, but it's been trending very well. Since then, it looks like we're kind of breaking through that. The trend line kind of summarizes that quite well. And if you look at the structure from the past few days, we have created support, had a pullback, broke the support, created a new low, had a pullback, broke that support, created a new low. Looks like we had another pullback back into resistance. If we can maintain that, I do think US 30 is likely to fill the wick and keep that momentum going. Now, I wouldn't predict anything crazy. I don't really like selling the indices, but in this condition, it makes the most sense. I definitely wouldn't be buying, that's for sure. But in terms of the market structure, very, very consistent lower lows and lower highs on the 4-hour chart. So shorts make the most sense. Again, if you're looking for entries, I think now would be a little bit too late. So I would be looking for another move higher, back to resistance, and that's where we're looking for entries. This is essentially the area you're betting price is going to hold. So you don't want to see price do that. If it does that, many different things can happen, but I wouldn't be so confidently bearish. If we can maintain this level here, I would be confidently bearish. So yeah, I'm liking what I'm seeing for US 30. Again, entry wise, stop loss wise, I want to be up here, up in this area, not here. That's already eating into my profit anyway. And then of course, support target around 46.5, anywhere around those wicks there. You can again probably take some profits beforehand. So indices are looking mixed. Nas again, I wouldn't have a bias. US 30 would be bearish, and then S&P is a mixed bag as well, up and down, up and down. I mean, this one actually had a really nice rejection of this level here. Same kind of consolidation like the Nasdaq. Looking for price to get to extremes, that's where you want to find your entries. Quite a violent wick there, but same thing applies. Reject to the low of the range, that's where you're looking for opportunities. We push back. Now, when you are looking for range plays, I would always say have two targets, because range don't always guarantee price gets to the opposing side of the range. There's a good chance that price gets to the middle, because that's the equilibrium. That's where buyers and sellers particularly agree on price. That's kind of why we're oscillating around that area. So equilibrium is always a good place to target. And then if price breaks the middle, then you can leave maybe 60-50% of that position, or however you want to manage it. There's different ways, but that's typically how I approach it. So once we hit the middle, then I'm like, okay, there's a good chance we can get to the opposing side. And if we don't, I still walk away for profit as well. The situation that I don't like to be in is when I'm bought at the low of the range, price is rejected well, we're 60-70% of the way there, then we kind of just lose momentum and come back down. You've caught a nice move, you've caught the extreme. Make sure you do pay yourself along the way. 50% is always a good benchmark. The opposing side, yes, is a good target, but it's not always guaranteed. And again, nothing's guaranteed as well, but at least you give yourself another dimension to walk away for profit. But again, with S&P, again, now went back in the middle. I wouldn't be looking for entries here. Again, lower time frames to me looks very, very noisy. So unless we get another push back to the lower end, great. That could be something to look to trade. Or of course, even if we break out, then this becomes my next area of interest, which is 6,500 roughly. That becomes the level which I look to do business. I keep it simple. If the indices are trending well, they're drifting well, we're looking just for pullbacks, aggressive buys. If they're kind of mucking around like this, looking like they're in the range, then the goal is to buy as low as possible. But guys, we have run out of time. I do appreciate each and every one of you tuning into the streams, and of course, thank you to Nick and the team for allowing me to be here. I really do appreciate it. Guys, if content, I'm pretty sure the team have dropped my link to my channel. Check it out. More stream, more analysis like this. But guys, really appreciate you tuning in and listening. Have a great day. Have a great rest of your week, and I'll be here next week. Take care, guys.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone. Welcome to my segment of the daily live stream. Before we get started, as usual, I have a DNA Funded challenge to give away. So in the comment section of the live stream, you will find this link right here. Okay, so just go to the form, fill it out, and in around 15 minutes, I will put all of the names in the wheel of names and we will pick a winner, okay? So that is the first thing on the agenda. Second thing, as far as what happened between yesterday and today, not much. The best way to find out what happened is, in my opinion, to look at financial juice. So instead of wasting, let's say, 2 hours on Twitter or hours on social media, you can just look at the financial juice and see what actually happened, see what actually matters. So as far as the market moving stuff, we have had Iran operatives made offer to discuss terms for ending war, and then we had Iran hasn't closed the Strait of Hormuz, okay? Now, I think that this actually didn't happen. I think this was a bit of fake news, but I'm not sure. And as far as the Strait of Hormuz goes, will they or have they closed it? Is it free to pass? They say that they haven't closed it, but then they threat the ships that pass that they will maybe send some rockets at them. So it's pretty 50-50. There's still a lot of uncertainty. Even though you're getting some, you could say, risk on news. Now, as far as Forex news goes, I'm not going to scroll through the whole thing because there's just too much. There's just too much on it. But essentially, nothing much happened. The big thing that we have is tomorrow, of course, the NFP non-farm employment change. The forecast or the previous number is 130. Forecast is for 58, and we're going to see what will happen with the actual number. And of course, we're getting the unemployment rate. I'm in one position. I'm in one trade. That is the euro dollar. So I'm selling the euro dollar. Let me see what the pound dollar is doing. Moving down as well. It's running just a little bit of profit. I still like this position. The NFP tomorrow could move the markets, absolutely. So depending on the NFP print, depending on the unemployment rate, it could move the US dollar, put some weakness or put some strength into it. As far as I believe, I mean, this news, this 58K, because it's lower than the previous number, and then if it comes in even lower, it should be bearish for the US dollar, okay? But if it comes in better than expected, it's going to be bullish for the US dollar, so euro dollar will continue to go down. To refresh your memory, why am I in this position? It is essentially a position betting that unfortunately the US and Iran conflict will be a prolonged conflict instead of a quick operation that lasts a few days, maybe a few weeks. So looking at the past, looking at the history, I cannot say, I can maybe count on my hand the number of times where the US did a military, let's say, attack or invasion, and it actually lasted for a few days. Most of the time, it turned out to be a long, prolonged war. And that's not good for the markets. That is definitely not good for the euro because it messes up the oil supply for Europe. And it is bullish for the dollar at the end of the day, because when there is a risk-off event, when there is a risk-off concern, the dollar tends to appreciate in value, okay? So that is my bet for the euro dollar. Also, if I look at the edge finder, I think we're still getting a bearish reading. Yeah, so bearish reading right here, which definitely goes well in my favor. So that's a trade I have on. Gold, I'm looking to buy. I did have a position on, but I closed it for 1.1%. Let's take a look at the gold right here. Neutral reading on gold, so I want to see a bullish reading. For me to buy gold, I definitely want to see a bullish reading. If we go to the history, let's just take a look. So yeah, it was neutral on most days, but it used to be bullish. Although the last bullish print was on February 22nd. Yeah, looks like it. So waiting for the NFP tomorrow, waiting for some other data points as well, and then maybe this can flip. Maybe this can flip to bullish. The technical level is okay. So the technical level is fine. We are looking at the 20 MA. We are right near the 20 MA. So I like the technicals. I just need the confirmation from the edge finder. Pound Aussie. As far as the Pound Aussie goes, Mishuk says can't fill in the form. So the form resets once per month. If you used an email, you cannot use it again for another 30 days. So the form resets every 30 days. If you want, you can use a different email. That's an option. Or you're going to have to wait for the reset, because we don't allow the reusing of emails in a time span of 30 days. Those are just the rules for the giveaway. So Pound Aussie, still looking to sell. Let's take a look at GBP AUD. Bearish score on the Pound Aussie, -8, which is nice. I'm looking at the 20 MA, looking for a bit of a bigger pullback, bit of a bigger correction, or not a correction, but you can say a rally. So a small rally that hits the 20 MA, and then I would be pretty happy to get in on a sell position. That's my game plan. So 3 assets for this week. 1 position, 2 assets that I'm looking to buy or sell for the Pound Aussie. USD JPY seems to be moving higher, seems to be approaching the possible intervention level. Just wanted to remind you, to refresh your memory, on USD JPY, the critical level, the crucial level is, of course, just a second. The crucial level is, of course, the 159-160 level. At that level, you could think about getting in a sell position, betting that there will be an intervention. That is my game plan. And of course, if you're in the A1 Discord, you will get notified about any positions that I take, and you can expect a sell trade for me to execute if we get up to those levels. If you want to join the A1 Discord, if you want to get all of my trades, I've recently had quite a good streak. I had a 2.6 winner on the Nikkei. I had a 1.1 winner on gold. So I'm doing pretty well. Now, of course, my win rate is 50%. So the next month, I may take 2 or 3 losses in a row. I just had a good streak, or I'm currently having a good streak, you can say. So it's not past results are not a guarantee of future results. But what I wanted to say is join the A1 Discord and use the code Marco to get 25% off. Right? So code Marco gets you 25% off, and then we can all trade together. I personally love our Discord. I love the trading chat. There's so many active traders, and it's not traders trading like ICT or SMC or just some squiggly lines. It's actual knowledgeable traders with a lot of experience in prop firms and fundamentals in general. So it's a quality trading chat. It's not just some random chat that you find online. So USD JPY we covered. Stock market, US stock market, I don't know. I mean, I'm looking at it. It seems pretty boring. It seems pretty bad. The Nikkei is selling off. Let's just hide this. The Nikkei is selling off. The DAX is selling off like crazy. So this is the German stock market, which I was at one point looking to buy. Good thing I didn't actually execute. And if you look at this, the DAX hasn't moved anywhere in almost 1 year. So the DAX has stayed flat for almost 1 year. Europe is doing pretty badly. German GDP is really bad as well. We can look at the, just take a look at this. If you go to the Edge Finder, go to economic data, go to GDP, look at the US. Just a second. So let's look at the US. Okay, so let's let the Edge Finder load. Let's get back to the charts. Essentially, my main point was Europe is having issues. The German GDP is flat or maybe even negative. The GDP in Europe is pretty low as well. And now they're having issues with supply. So now, on top of all of that, they are having, I think, 15 or 20 or maybe even 25% less oil and energy coming in because of the US-Iran conflict, because of the Strait of Hormuz. Neural Clips says, how do I enter the giveaway? So I'm going to post the link to the form one more time in the comment section of the stream. You're going to find the link to fill out the form. Okay, fill out the form and you will get entered into a DNA funded giveaway. Let's see, have we loaded? I think we have. Yes. So this is the USD. This is the USD GDP. Now compare the US to Europe. See? This is 0 point something. And then look at, for example, let's take a look at UK as well. UK pretty low, pretty bad. Let's take a look at Australia. Okay, a bit better. What about Canada? Overall looks fine. Let's do New Zealand. Let's do Japan. Japan is really bad as well. Japan GDP not looking great. What about the Swiss? Okay, what about, I think this is China. China doing pretty good, actually. Yeah, as far as the GDP goes. Essentially, my main point is that Europe is not doing well. Europe is getting bad economic data. That's, of course, one of the reasons why I'm short on the euro dollar. But of course, the DAX is just falling out of the sky. Silver back below the 20 MA. So silver cannot seem to catch a bid anymore. This is normal. From some of the research I've been doing after a huge rally like this, and then after a huge crash, it is normal to see some consolidation, to see some flat price action. So this happens from time to time. Okay, copper, platinum, Bitcoin. So Bitcoin actually started to catch a bid on Wednesday, so yesterday. But did it follow through? No, not really. So if you zoom out, it's still consolidating, still not doing much, still pretty bearish in my book. The narrative is still bearish as well. I'm not seeing any hype. I'm not seeing any new use case for Bitcoin. So I'm staying away from crypto at the moment. Ethereum, same thing. So Ethereum, of course, follows Bitcoin. US oil flying higher today. So oil prices just seem to be continuing higher. This, of course, goes in line with the risk-off scenario and the current US and Iran conflict. So let's just see, when Trump took office on January, we're pretty much back at those levels. So one of Trump's biggest things that he wanted to do one of the things he wanted to do was lower the price of oil. He was successful, But now we're back up to those initial levels. So you have to also note Russia heavily depends on selling oil. Russia heavily depends on the price of oil as well. So oil being at 78.1 gives Russia more money, gives Russia more power to prolong the war in Ukraine. So that's a big negative of escalating the conflict in Iran, because Russia is now getting extra money for its oil. I believe that's how it goes. Don't quote me on that, because on oil, I don't have a lot of knowledge. I don't have quite a lot of experience. Time for the giveaway. So let me copy all of the names. Just 1 second. Let's see, today is the 5th of March. Let me find all of the names for today. Okay, let's take a look. Nice. We have quite a lot of entries. Copy the names into the wheel. Okay, so let's see. Mohammed. Okay, I think Mohammed N is the winner. Congratulations to you. After my segment, after my stream is done, I will send you the code for a free 5K one-phase account to your email. So you can expect to receive that after my segment. If you didn't win and you want to expand your trading capital, you want to get funded, we highly recommend the sponsor of today's show, which is DNA Funded. So this is my personal 25K two-phase account, up currently 3.37%. Current equity is 26.2. So I'm up more. I'm up 4%, something like that. I had a 50K phase one, passed it. Phase two passed, funded stage, blue, no payout. Bought a new account, 25K, two-phase account. I have a great experience so far. Behind this prop firm is a big broker. And with the code A1Live, you get 25% off any DNA fund challenge. So code A1Live, 25% off any challenge. So if you're looking at all of the top prop firms like FTMO, 5%ers, E8 Markets, DNA Funded is one of the top prop firms, is one of the reliable firms. And with the code A1Live, you get a really, really good price as well. I think it's pretty hard to beat this price when you look at all of the competitors. So take advantage, use the code, and yeah, let me know how it goes. Let's see the comments. If you guys have anything you want me to bring on the charts, if you want me to analyze something, definitely let me know in the comments, because I'm going through them right now. Hello, Sluggy. Cycling Club, welcome. Cycling Club says you can pass, but at your own risk. I'm not sure what you mean. Is that a quote from The Lord of the Rings? I went long USD JPY 156. Okay, or I went long 156. Personally, I wouldn't do it. Personally, I think we could see some strength come into the yen as well with the buy Japan narrative. So USD JPY is not my favorite thing to play at the moment. If you want to play something with the dollar, I think a better bet is selling the euro dollar and selling the pound dollar. I think that is a bit better. What I'm personally doing, just to remind you, is I'm looking at the potential intervention levels. So I'm looking at 159 and 160, because that is the level where the Bank of Japan was pretty vocal that they don't want to see crossed. Okay, so they may go in and defend that specific level. They did it in 2024. The peak was 161.8. So that was kind of the peak. And then they came in with an intervention. The markets absolutely dropped lower. Okay, so that may happen again. That may happen again up to this level. And then I'll probably take a sell position betting on the drop. And yeah, if I do take a position, you will of course be notified in the A1 Discord. So if you're interested in that, check out the link in description and use the code Marco to get 25% off. A1 trading come to us. Not sure what you mean by that. Can't fill in the form. We covered that. Okay. I swear gold was +6 yesterday. Yeah, I remember that as well. So at one point this week, gold had a bullish reading, had a score of +6. Now it fell all the way to 0. So new developments, new data points. I have to play on what I see at the moment, on what is on my screen at the moment. Neutral scores, so no bueno. No trade for me. Cycling Club says, wasn't Russia capped per barrel when they attacked Ukraine? Not sure. Again, you may have more information than me, but at this moment, I don't think that Russia is capped per barrel. I think if oil prices go up all over the world, if energy prices go up, Russia benefits. Russia earns more money. Okay, that's at least what I can see from the reading I've been doing online. It may be wrong. My sources sometimes are unreliable, so keep that in mind. EuroCAD, Sluggy says EuroCAD. Let's bring it up, see what's up with that one. Big sell-off. Big sell-off on the EuroCAD. We know that the CAD is connected with oil. Canadian dollar is connected with oil. Euro, the forecast is that the euro will keep on losing value as this conflict escalates more. Yeah, this thing is a flyer. This thing just flew lower, so I don't really see any opportunities to get in on a sell position. What does the edge finder say? Let's take a look. EuroCAD. Neutral score, neutral at the moment. I would look for a pullback. Will a pullback happen? Not sure. Can you look at EURGBP? GBP. EURGBP for me is flat. Pretty flat right here. And in my opinion, both the euro and the British pound are weak currencies at the moment. So the edge in selling or buying EURGBP is really small. Of course, in the Forex market, you want to pair a weak currency with a strong currency. For me, because the euro and the pound are both weak, I'm looking to sell both. I'm doing it through selling the euro dollar, and I want to get in a sell setup on the pound Aussie. So EURGBP, not my favorite thing. Let's see the score. Bullish score. Yeah, personally, I'm not interested. Then Marco knows all of the references. I know a couple of memes. That's about it. What about USD CAD looking to go long? Okay, let's take a look. USD CAD. USD CAD. I do like the dollar at the moment. I have to admit that. But would I go against the Canadian dollar? Personally, no. Personally, I would not. There's a neutral score on the edge finder, so not the best setup in my personal opinion. That's just my plan. It is my sort of strategy. You may have a completely different view, but I think Canada should benefit at least a little bit by rising oil prices. The dollar should benefit as well because of the conflict and because it's a massive safe haven currency. The whole world runs on the US dollar essentially. And one more thing. So edge finder is neutral. Yeah, edge finder giving a neutral reading. EURGBP, I had a sell position on this one. Got taken out. This was a signal in the A1 Discord as well, and it was a loss. So this was a losing trade for me. I'm not looking to do anything at the moment. USD CAD is one of the only USD pairs resisting the DXY strength. I think it has to do with Canada being heavily connected, or the Canadian dollar being heavily connected with the price of oil. I may be wrong, but I think that could be the case. Aussie JPY, gold, pound USD, euro NZD. Let me pick what I like here. Pound USD. I am bearish on this one. And I think it's a nice added setup with selling the euro dollar. If you don't want to play the euro, if you want to play purely the pound, I think selling the pound dollar is a good way to go. I would look for a bit of a pullback, let's say. A bit of a pullback, maybe a sort of a retest of the 1.344 level, something like that, where the 20 EMA follows the price, okay? So like this, and then to get in. So that could be a good play. That could be a good play on the pound dollar. Would I look to take it? Personally, probably not. There is a bearish reading. Since I'm already in the euro dollar sell, I may not be super happy to jump in on a pound dollar sell. Marco, you've been trying to short pound Aussie for months. Tell me about it. Yeah. So I've been bringing up this chart ever since the 15th of January, maybe even earlier. What I was looking for was, of course, a pullback to 20 EMA. It never happened, so the price just flew away without me. I still have it on the watch list. I would still be pretty happy to get in. I think this could have more fuel to run even lower, especially if we pull back a bit. So if we pull back, a bit, correct, and then we can maybe drop to the first major support, which is here, around 1.863, something like that. That gives you an okay trade idea. That gives you an okay reward to risk. If you use a smaller stop loss, maybe a bit of a bigger stop. Definitely above 2. So kind of 2.3 reward to risk. That's fine. That's nice. So I still think there's an edge behind selling the pound Aussie. I still think there's an opportunity to make a profit. Marco, you suspected the things might escalate last Friday as you took a poll. Not sure what you mean by that. The way we could have possibly anticipated what happened not Friday, but on Saturday, meaning the US attacking Iran, the US was moving 30 or 40% of its fleet near Iran. The US was evacuating US personnel out of the area. China was issued a public statement saying to its citizens, don't go anywhere near the region. So something is brewing, don't go anywhere near it. So those were the signs. I should have known. Maybe I could have placed a position or something. The only thing I had at the moment, or last week, I had a buy position on gold, which I did close on Friday. So I closed it on Friday right before the conflict escalation. Okay, so that was what happened. Thoughts on the Nasdaq? Yep, sure. Let's take a look at the Nas. So Nasdaq actually up on the day. Yeah, Nasdaq looks fine. Nasdaq looks fine. I mean, it doesn't look fine. It looks fine on the day. Zooming out, not a great situation. Flat, range-bound, corrective, no catalyst. You have the artificial intelligence story, which is cooling off. So some of the bigger tech companies are selling off. Let's quickly go through those. So Google, I mean, it's off of the all-time highs. Meta, Microsoft. Yeah, just not a great story for the top technology stocks. Personally, I'm staying away. I don't think this is the right scenario to be in the US stock market. If we get a bigger dip, bigger correction, fine. We get a better price to get in. At the moment, I just think we're flat. We're range bound. The conflict between US and Iran is a total unknown. No one knows how long it's going to last. So we're going to see how the price develops. That is about it from me. Thank you very much for watching. Don't go anywhere because you have Alan coming on right after me. So good luck in the markets. You can catch me tomorrow on another live stream, and I have more accounts to give away. Good luck. See you in the next one. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone is doing fantastic today. Let's go ahead and get started here. I was doing some research, just some casual reading here before I got on here. Talking about just like global inflation and stuff like that. You can see oil is popping off here, getting close to that 78. It was at 78 here just earlier. And now it's looking like it could break out here. We're looking at the weekly time frame. If we get a pop above here and then close above, then you got to look left for potential other targets. I'm thinking we're looking at, if I just draw this out here, looking left, you have 84, you have this could be a good one too as well, 89, so around 90. And then obviously above here, you have talks of getting into the 120s, which that's pretty steep. But what I was getting at is if you do see this elevated for longer, and I know we've talked about this on the stream, you do have the risk of global inflation. I was just looking at yields here, German yield. Let's look at the German 10-year yield. Let's go to the daily time frame. You can see that German yields are high. Italy, Italian 10-year yields high as well. Spain 10-year yield. I mean, you kind of get the point here. France 10-year yield. So you do have like this, and then of course, if you look at the U.S. as well, you do have the U.S. 10-year yields as well going higher there. You are getting the dollar get a little bit of a lift off here. A lot of it has to do with just a safe haven attraction. As you see oil pick up again, money's going back into that safe haven. And also too, we had jobless claims beat expectations, came in lower, which is good for the dollar. So we'll see. I think the real test will be tomorrow, of course. You have NFP, unemployment rate, and retail sales as well. So that's what I'm going to be waiting for as far as taking new trade setups. I'll wait for after. If anything, if I don't trade on Friday, I would wait till after the weekend's over because you never know what can happen over the weekend. So at least I'll be trading in Monday, even if price moves away from me, wherever which way it goes. I will have the weekend behind me and also have the clarity of the numbers and the context of what that means for the market. So that's kind of my game plan here. I'm looking at the euro dollar here. Again, with the higher yields across the board in that area, I do hesitate a little bit. You also did have some improving numbers here in the eurozone. So you had unemployment rate tick lower. Nonetheless, though, it's still performing kind of bad. There's a lot of risk in that region, but you do have that risk. But although you do see elevated inflation or inflation expectations throughout the world with those higher yields, again, money's going to flow in a particular place, and it's going to be the higher yielding currency, the safer one, which I think is going to be the dollar. So even if we do get a brief pop here in the euro dollar, I'm still looking to fade that, especially if this conflict persists, because yes, global inflation, yields go high. That doesn't mean, or that can mean, that other central banks are going to hike rates. But if everyone hikes rates at the same time, who's starting off with a higher rate? That's going to be the U.S., right? So I like that. I like that play. So I'm looking to go ahead and fade that euro dollar if we get into here. So hopefully, not hopefully, but if you do get the outcome that analysts expect for NFP and all that good stuff tomorrow, you can get a little bit of a lift off here in the dollar, or a fall in the dollar, and that causes the euro dollar to go ahead and lift up a little bit, and then we can go ahead and fade that. So something I have on my radar here. Will I look at gold? Yeah, I'll look at gold. Another thing for gold too, interesting that you bring that up here. We do have, let's look at the score for Edge Finder, because if I'm not mistaken, it's at a neutral reading of 4. Oh, it's actually 0 reading. So it came down a little bit, which is interesting. Sentiment, crowd sentiment. Okay. Okay, let's look at gold here. So gold, I was saying in my video yesterday, if you do get these things come out bearish for the dollar, like you can think of gold as kind of a counterpart to the dollar. So if you see non-farm payrolls miss expectations, that'd be good for gold. If you see the unemployment rate come in higher, that'd be good for gold, right? So maybe if that outcome does happen, you get gold tick up here to the bullish side. And if you do, I do think that gold right now is kind of at a good level here to buy, like on this pullback here. This was previously just a support and resistance zone. So I can mark this up here. This was resistance. This right here was support. We were kind of range bound between the two. We broke out here. We got to this level here on, when was this? Tuesday. You had this strong wick here to the downside, but then it finished the candle here on that level of resistance. Now I think it could turn into support. So we go ahead and switch this here to support. And we'll see how this holds, right? Obviously, you're seeing some price action here pretty heavy to the downside, down 1% on the day. So this could obviously flop. That's definitely a possibility. However, the scenario I was kind of looking at was if you were to see a bullish score on the Edge Finder and this pullback into this level here, the support level, then I think that's a good possibility to the upside. But we'll see how that plays out here. We might get some price action, take us lower here, and then we finish the day off still within the zone. I don't know. I can't predict that, but that's something that you have to look out for. If you see this thing continue to flush, you see that neutral reading on the Edge Finder, or just a reading that's not bullish, then gold can definitely continue sliding lower. Again, the safe haven during this time is going to be the dollar, right? Which is pretty weird because gold is usually a good safe haven, but you do have that inflation worry, all that good stuff that's putting pressure on gold. If dollar's doing really well, that's going to have an upside cap to gold. So that's my possibilities. Again, if you see a bullish reading on gold somehow and you're trading within the zone, I think that's a good support level to take it higher. But if you don't, this thing can easily flush lower, and then you can just get better prices for the future. So it really just depends. I'm looking at dollar yen too. To Marco's point, I was watching his segment. If you get somehow super high elevated into these levels, like the 160, like if you just get anywhere here really fast, I'll be looking to go ahead and short it with very low size and super wide stops. This is not going to be a home run trade by any means. It's going to be just like a little an attempt, right? I'm not looking to have a big winner on this, but again, I do want to take a stab at it in case the Bank of Japan does go ahead and intervene. You do have lots of downside potential. So last time they did that, I measured this out before, but this is about 2,000 pips to the downside. So even if I have super low size, 2,000 pips, right? That'll show something, right? So we'll see how that plays out as well. Dollar Swiss here. Very interesting from a technical basis. Let me go look at that Edge Finder score first before I say anything, because it does look very interesting on the technicals. Dollar Swiss. Where are you at? Right here. Okay, so getting a neutral score here. If you do get a miss of expectation tomorrow with NFP and all that good stuff, and you do get that dollar fall off a little bit here, this is a good level to go ahead and short. So this was previously support many times, 1, 2, 3, 4, 5 times, until we ultimately broke. Now we've retraced here, and if you do get that miss of data points there for tomorrow, then this could be a good short-term short, right? I still think that if this thing prolongs and you have the dollar continue to be that safe haven, that over time this thing would just drift higher a little bit, but this could be like a good intraday play. You can see last time I illustrated this before too. Once we're going to go to the weekly time frame, this bigger level here was a level of support. You can see, once, 2, 3, and then we ultimately, right, we broke below, similar to like what we just did here in this area. We broke below, retraced back into here, and then just continued drifting lower. So that'll be like an intraday play for tomorrow that I have on my radar. Again, I don't want to have any open positions going into the weekend or any swing trades by any means. So if that happens, then I'll fade that a little bit. But if not, if you do get some good numbers for NFP and unemployment rate, then I'll just stay out of it and I'll just take nothing. I won't take any trade. Aussie dollar is a trade I like as well. for like the long term. If we do get somehow a revisit to these levels here, that 6,900 level, I do like that as a level of support. This was that breakout level when you had continuously high CPI prints for the Aussie dollar. The RBA was looking to hike the rates. So I really like that idea. If we can somehow find our way here, then I'm looking to trade this thing higher. Surprisingly, though, the Aussie dollar has been pretty relatively strong, considering that it's a very high beta risk asset. And same thing with the Kiwi dollar. And it's performing pretty well here. So despite all that, I would expect something like an August 5th type of reaction where you just get continuous, just downside bleeding, lots of red candles. We're not seeing that this time. So we're seeing like some wicks here, but ultimately the Aussie dollar has been reviving itself. So I like to see that. So if we do find our way here, I think that's a good level to start a position, to start a campaign long Aussie dollar, especially if you have the conditions of, you know, everything going on with US and Iran and Israel. If that kind of fades off there and you start trading back to the normal fundamentals or whatever, the normal drivers, then I think this thing has some upside. So that's what I'm looking for, the Aussie dollar. I can show you here, they have been fighting with elevated inflation. Again, if you have this oil story staying higher for longer, right? I was showing you the yields across the Eurozone, but let's look at the Australian yields. Australian yield. Let's see here. Let's look at bonds. Let's look at it's probably going to be AU 10-year yield. AU, there it is. Right, so yields across the board are staying pretty high. So this thing's pretty strong here. I can show you again, like I was. Let's look at AUD. They've been fighting for 4 consecutive CPIs. They've been having elevated inflation at 3.8%. So they're very actively trying to fight that, right? That would be via raising interest rates. So I do like Aussie dollar to the long side. There's other ways to play the Aussie dollar too, right? If you go to the top setups page, you can go to, I know Aussie Swiss is up there. Aussie yen is up there. Aussie Kiwi's up there. The only thing is that price action, it's kind of run away here. So if you look at Aussie Swiss, let's go to all. Yeah, Aussie Swiss, like that thing is run away now. So like you're kind of just chasing price a little bit. So I wouldn't really do that. I like the Aussie dollar story the most. As far as like the other currency pairs here that I'm looking at, dollar CAD, not looking to trade it. It's been relatively weak, although the dollar is a safe haven. You do have also that correlation to oil, that Canadian economy. If oil just stays high, then Canadian dollar will also stay high as well. So not really good to trade. Like I said this before in the Telegram channel last Sunday, this previous Sunday, going into that market open, I basically dropped like a little cheat sheet when it comes to currencies, because currencies can be tricky in an environment like this. You do have to be mindful of the role that each currency plays, right? You have your safe haven currencies, you have your risk on currencies, all that good stuff. So for example, like you don't want to trade 2 strong pairs or 2 weak pairs, because the price is going to be choppy, kind of flat, kind of like not worth your while, right? So like, for example, Swiss and the yen, both safe havens. I'm sure the price action hasn't been good, but you also have, for example, this one, the dollar, which is a safe haven, but also the CAD, which is a proxy to oil, also very strong. So that's why you're seeing like this very lackluster price action versus you look at something like dollar yen and that thing's just been running up, right? So kind of what I'm looking at. Let's go ahead and look at Swiss yen. I'm just curious if that's the case here. Yeah, I wouldn't say. I mean, it's drifting higher here, but nothing too crazy, nothing too opportunistic for Swiss yen. So that's kind of my play here. I see. Hey, Alan, do you think a different type of analysis needs to be employed with these geopolitical implications, or is it just trade as you always do? That's a good question. You do have underlying economic data points that are definitely going to affect the market. Like, for example, you do have the US dollar. The US dollar is thriving for a couple of reasons, right? You have that safe haven attraction for the US dollar, right? And then you also have, it's tricky because you also have the underlying macro calendar that we're going to see on a day-to-day basis. If you see, for example, the dollar being a very strong safe haven, but then you also see like strong NFP, strong unemployment, like just continuously good stuff for the dollar that can really go ahead and lift off. So you do have to be mindful of like the underlying things. But example for like the euro dollar, same thing, kind of weird. You're seeing improving data points for the euro dollar, but then you also have this overpowering theme of global inflation and the implication that it has on the euro dollar, pushing it lower despite the good numbers that they saw a couple days ago. That those good numbers usually would have lifted off the euro. It did a little bit, but it's ultimately fading off. So the way I would approach it, the way I'm approaching it now, is follow the assets that are driving the flows, right? So for example, oil. If you see oil lift off here, then obviously we're kind of risk off, right? I'm looking at the VIX as well here. It's not too high on the day, but that's a good measure of how deep risk off we are. Also the dollar. So oil and dollar are the two charts that I'm watching off. Everything else comes second. So if I see the dollar fade off here, then most likely you're seeing gold up a little bit. You're seeing stock market up a little bit. If you're seeing oil flop, same thing as well. If you see oil and dollar rise, then we're risk off again, and we're starting to see things bleed. So you can see that with the Aussie dollar today. Aussie dollar today, risk on asset. I did say it was relatively strong, but you can't ignore that it is down on the day. So that's kind of how I approach it. To keep it very simple, with anything in this environment, it's a low size, high stop loss or wide stop loss. That's how you're going to survive it, because things can happen. I did mention too that the world desperately wants a resolution. So any sign of that, markets will go ahead and take that and reprice whatever they need to reprice. And so you can get some really, really like big whipsaws that you just can get taken out if you're taking a very narrow stop loss and you're like trying to risk it for the biscuit. It can really hurt you there. So that's kind of how I would approach it. It's a little bit weird, but yeah, I guess I would just follow oil and dollar as far as like the current themes, right? But if you want to play the overall like long-term picture, it's a buy the dip opportunity across equities and stuff like that. So although equities do bleed, let's say you get into that 6,500 level, that's a buy the dip opportunity. You can start a campaign to the long side on that. So yeah, that's kind of my thought process on how I would navigate it to anyone that's wondering. Any other chart markups here that I can go after, I'll definitely go ahead and do so. But yeah, that's pretty much my trade ideas here for the week and going into next week. So let's look at Bitcoin here. This is going to be an interesting chart. Edgefinder is showing a bullish reading there on Bitcoin. Let me verify that too. Bitcoin bullish reading. Awesome. So this could be a very cool underdog story. Bitcoin, for the longest time here, before any of this happened, was trading lower, and now you are seeing it kind of lift off here, climb from the dead, especially right here. This price action that you're seeing, this sideways price action, was when everything else was selling off. So Bitcoin is showing some relative strength here, showing a bullish reading on Edgefinder. We'll see if we can pop out of this 76, 70, this big range here that I have marked up. If we do, maybe that can prove some resiliency in Bitcoin, and then this go ahead and trades higher there. So very, very interesting. One thing I would say on that note, right? Bitcoin would be something that I would never look at. I don't trade it by any means, but again, the beauty of having software tools at your disposal that can highlight these ideas that you would never think about, that's going to be your Edgefinder. So go ahead and definitely get yourself a copy. I don't think the Edgefinder is on sale right now, but you do have the VIP signals, the Discord on sale as well. So it is 40% off. And I think they're doing 45% off if you say that you're, coming from the stream. Emily, Drew, fantastic people. They'll go ahead and help you out on that front. So definitely go ahead and participate. Join the Discord group. Get yourself a copy of the Edgefinder. I promise you, institutions are trading the markets very wisely. They don't do the data collection, data consolidation, all that good stuff. They don't do it by hand, and neither should you. So if you take your trading seriously, I would definitely recommend getting yourself a copy. Also, too, if you don't have the money for it, totally respect that, right? If you still want to be involved, go ahead and join that Discord channel that we have. It's completely free. You have chart markups. You have, daily quizzes. You have discount codes for prop firms if that's your thing. So always, we're looking to help you out here. We have free options. We have paid options. You pay for what you get for. So this is like a legit service that they have. All of the traders that are in the Signals group, they've been vetted. They're fantastic. You see them here on the daily show all the time. So, you can see for yourself. They're fantastic people. So I would definitely recommend joining us and just being very active in the community. And if you're in the Discord as well, just talking there, we're happy to have you. So it's a fantastic bunch of us, and I'm very happy to be a part of it. And now we can, go ahead and navigate these markets together, right? So, and I said this yesterday jokingly, but I'm sure If you do have some kind of a Discord service already or like a Signal service already, take a deep thought of it and ask yourself, is it working out? And if it's not, then go ahead and make that switch over. I promise you won't regret it. Okay, let's look at the stock market here. Stock market too, speaking of risk assets, with the Aussie dollar, stock market has been quite resilient. So I kind of like to see that. I know we are getting a bullish reading on the Nasdaq here. I'll verify that real quick here, but let's look at the S&P 500. You visited this level of support, this 6750 level, and you just get these wicks higher and these close above it. That shows some resilience there. It seems like the market, the stock market at least, is kind of just like shrugging this off a little bit. So you do see that here. Nasdaq too, some relative strength there. Again, we got into this level and we just traded above it, which is fantastic. The only thing that I think that could really disrupt it is if you do get that like sticky oil, a confirmation that this thing is going to be prolonged, and you have this global elevated inflation, and you do get the Fed looking to go ahead and act by like holding rates steady for longer or hiking rates, then of course that can be a negative catalyst for stocks, and we see this bleed lower. But as of now, this thing is showing some relative strength here, and I think Nasdaq. Let's see if it was if I'm correct on that. Well, it was getting a bullish reading. Now it's getting a. Actually, wait. Let's see. It says 4 here on the table, but on the actual page it shows 7. So I'm gonna take that 7. Yeah, bullish reading on the Nasdaq, so showing some relative strength. I did say, like, if you go to the lower time frame, if you want to take a stab at it, not financial advice, of course. If you go ahead and take this thing lower into this level here, like this level right here, I think taking it to the upside there, I think the better zone too would be if you stay a little bit more patient. I know we almost got there, but this is the level of support that I was looking at, this 24,000 area. Maybe if I make this a little bit wider, this level right here, I think that's a fantastic level to go ahead and buy the Nasdaq. As long as you still see that bullish reading on the edge finder, I think that's a good trade. Maybe dumb, but isn't the yen a safe haven? Shouldn't it be rising? Elvis, you're not dumb, man. That is a fantastic question. It is a safe haven. You're correct. You're completely correct. So is the Swiss franc. Swiss franc is also a safe haven, and you can see that the dollar Swiss is going higher, meaning that the dollar is stronger than the Swiss. Why is that? It's a couple reasons. The dollar is just a stronger one, right? In times of war, America is the bigger superpower. It's very, very safe. People are going to fly into the higher yielding asset. Like, people care less about like earning a high yield, right? And going into safety instead and stabilization. And the dollar is acting as that role right now. So I always said, you know, the severity of the risk off move, depending on the yen and the Swiss, if you see a true flight into those. But right now, the dollar is the king there. So yeah, you're right. It's they are both safe havens, but right now the dollar is just becoming the higher attractive safe haven, if that makes sense. Reason being is, like, global inflation is a real concern, and if that's the case, right, you have the dollar is going to benefit off of that. If I go to the edge finder and I go to the real yields, you can see that at the moment the edge finder is that real yield king. Let's go ahead and look at where's it, macro, this one right here. You see that the dollar, right, money. So when it comes to currencies and Forex, money tends over the long term drift into the higher yielding asset where you get that real yield. Basically, you take that nominal rate minus the perceived inflation, and then you can get the actual yield that you'll collect. And the dollar, for as long as this page has been existing, this is a relatively newer page. So for as long as it is of its existence, wow, that was a tough one to get out there. Dollar has been the higher yielding asset for the whole time. It has a bullish reading there. It's gone up in score here over time. And so if you do get global inflation tick up here and central banks like start to raise their interest rate, the dollar is starting from an already winning position. And that's the best way I can kind of articulate that. And that's why you're seeing the dollar being the ultimate safe haven against the other ones. Hopefully that makes sense, Elvis. And if not, let me know in the comments, and I'll be more than happy to go ahead and articulate it better if I can. That's my link there in the chat. Cool to see that we have Twitch and Kick there. But that's my link there in the chat if you want to subscribe to my YouTube channel. I am making daily YouTube videos and shorts and short form content as well. So definitely go ahead and show some love if you do appreciate my segments there. I'll be more than happy to accept your follow. And I'm very active too. So any comments that you leave or anything like that, any questions, I tend to respond pretty quickly there all the time. So definitely go ahead and show a subscribe. That will mean the world to me. Okay, just looking at the currency pairs here, we're seeing that the dollar continued to get that strength. Euro dollar, look at that, falling off a cliff. I know Marco's loving that right now. If you do get a break and retest, that can be another possibility there. Ultimately, though, I am waiting for NFP tomorrow. So this is the two options, right? Let's say the dollar just stays strong and continues to be strong. Then you get price action like this and you trade this thing lower. Let's say tomorrow instead, you get some disappointing numbers for NFP and unemployment rate, then you will obviously get a dollar fade off a little bit. And maybe we can get into this level here and trade this thing lower. Why do I like this level? If I put a Fibonacci retracement level from this recent leg here, this is that 50 to 61.8% retracement level here. If I go to the 4 hour, I like this little cluster of candles here. I have an alert here at the 50, and I'll be looking to trade this and fade this move lower. So we'll see if that happens. We are seeing some weakness there in the euro dollar, so maybe I missed that opportunity. I know one of the other options I was going to do was at 38.2. But I hesitated once we got that strong euro dollar numbers. I was like thinking maybe we can get a little bit push higher here, but we didn't. But the 38.2, that shallow pullback might have been the play. So let's see if I missed the boat. I am pretty notorious for missing opportunities because I wait for the more deeper pullback. I try to be conservative and stuff like that, but we'll see. We'll see how that plays out. I think there will be an intervention when UJ reaches 160. Not 160. So the Bank of Japan has said this. They don't like the yen weakness, of course, but there's no really level in mind that they have. Like there's no specific one. The Bank of Japan did say though, the clue that we have is that they very much care about how fast the yen depreciates. So if you see like a very slow, steady grind up into 160, then they are probably less likely to just intervene at 160. However, if you're trading at 156, for example, and you shoot up to 160 within like a matter of a week, that is a real risk to them, and they will intervene at that point. So they very much care about the speediness of depreciation versus a specific level. That's what makes it very, very tricky. And that's why the way I'm going to approach it is if we get into this level here, I'm not going to be very specific with a level. Like I'm just going to basically do this. If we get somewhere into here in this level, wherever it may be, whether it be the lower end of the channel or the upper end, I'm going to approach it by doing a very slow, very low size in trade and a very wide stop loss. I just want to participate, right? Again, I always say this, you can always add to a winning position. If you have low size, you can always add to a winning position. However, it's very hard if you go into a position deep, you go in with a big size and it goes against you psychologically, it is very hard to take off that size. So that's why I'm going to go ahead and approach it that way. So I just want to participate, right? You have 2,000 pips to the downside potential if they do intervene. So even if, this thing moves against me 500 pips, I still have 1,500 pips to go ahead and add to that position and make it worth my while. So again, I just want to participate and take a chance that they will intervene if this thing gets too elevated too fast. So that's basically my thought process there. Again, guys, before I head out, we do have Mr. Tiger Berry here taking over the show. I love his segments. I love his style. He has a lot of puns that makes it fun to watch. So I love watching that. I will say one more thing. Go ahead and join that Telegram channel. It is completely free value. If you do anything at all, join the Telegram channel. I promise you will not regret it. It is completely free value. And with that, Tiger Berry, if you are ready in the background, my friend, we'll go ahead and take it over to you. But if not, that's completely okay too. Yeah, look at that euro dollar, man, falling off a cliff. Euro dollar falling off a cliff here. We'll see. Stock market too. We'll see if we get that same price action that we saw the other day. You trade up into this level and then you just somehow fade higher. And this thing is showing some relative strength, but we'll see. Oh, look at oil. That's probably what it is. Oil is popping out there. Yeah, it's moving pretty quick there too. That's definitely going to raise the risk of global inflation, and dollar will most likely continue to benefit off of that. But all right, guys, Tiger Barry here is ready for his portion of the show. I'm going to hand it over to him. Thank you guys so much for watching. I truly appreciate it. Trade safely, guys, in this environment, and have a blessed rest of your day. Bye-bye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here, coming on to close the show up yet again. Speaking of Ola Prime, the commercial you saw there, Trader Nick does obviously have his A1T35 promo code, along with the QR code that you see right there on the screen. So definitely take advantage of that if you guys are looking to change it up a little bit, explore some new firms, okay, new prop trading firms. They did win a couple awards, by the way, just this past quarter. They won one for fastest payout, because they do payouts in an hour or less. But the interesting thing is they actually average about 35 to 38 minutes per payout. So it is one of the fastest payouts in the game. Best newcomer prop firm, that was another award they won in Cyprus of late. And I think they just won another one the other day, a recent one. So anyway, really cool prop firm. But one thing I wanted to show real quick, and then we'll get to the charts and things. If you guys go to their website, olaprime.com, if you go on here and click register, this isn't a registering to buy an account, but this is just a registration to create a dashboard. And once you do that, just keep in mind, they do have periodic competitions over here. So like, this is my demo account I used to use when I streamed online for them. I've got 100K 2K or 100K 2-step prime, but over here, if you click on the competition tab, you'll see that they've got a new one that's coming up. So you can register for that. Turn off my alarm there. And then if you just click on view, well, then you'll be able to see kind of the start time for it, March 22nd. But the registration is starting as of today, I do believe. So a couple short little set of rules there for you. And then as far as the prizes go, $2,000 to the first place winner, along with a free 2-step prime, 100K 2-step prime. And then second place is $1,000. And then third place is a free account. So just a fun little competition. Again, I don't believe you have to actually have purchased an account. All you have to do is just create a dashboard, okay? And then from there, obviously, in the future, if you want to add challenge accounts, then you can do so from this tab. So that's just a quick plug on that. And again, don't forget, always remember that he does have the 35% off code through through A1 Trading. So that's that. As far as setups for the day, guys, I am still in that pesky euro pound long position. It's kind of being a little bit of a mule the last few days. So we did drop into that daily and 1 hour confluence as far as the demand zones I was pointing out the other day. It's just kind of, again, it's being a mule. It's being stubborn. It's just kind of sitting there being lazy. A lazy mule, a lazy ass, however you want to look at that, right? But here we go. So daily, just a reminder, we dropped into this daily indecision candle, had a very strong gap out. There was 2 demand zones within. It did pierce through the 4 hour zone I was looking at initially. but I put my stop loss down here at the 675 level. So we're still in it. We haven't yet pierced the rest of the zone itself as far as the distal line. But it's just, again, it's just kind of making its own little 2.5 day sideways trend. So still just waiting to get a breakout up here. See if we can get that by tomorrow. I'm probably going to be out of this trade by the end of the week regardless. I say it all the time, but especially of late with all the geopolitical craziness and the bombs flying everywhere. I don't want to get a 100 pip gap against me and miss my stop loss. So regardless, I'll probably be out of this trade, whether it's down here, even if it's a few pips up, or obviously if it stops me out. So that's the one and only trade I'm in at the moment. I have had some recent alerts hit. So just looking at dollar yen, this is actually one that hit yesterday, but I wanted to bring it up because I don't think I did yesterday. So we had bounced into this demand zone over here. This is obviously giving us a bullish signal on the edge finder. And we had bounced into this 2-hour demand right here. So that right there was the basis for the starting point for me. Now, when I go to a 1-hour time frame, though, we had not bounced off the 200. So that's partially what kept me out of this. Because I'll be honest with you, without the moving average crossover, also without the RSI going below the 20, meaning severely oversold, I'd have probably been in this trade because look at this candle. We had a very bullish candle that wicked in nicely and closed pretty close to the top. So, this right here was a good signal. But because I filtered it out with the RSI, with the fact that price did not bounce in the 200 EMA, that kept me safe. So it's still alive because a little further down, there's a 4-hour demand zone. Keeping my eye on this area down here. And then again, if I go to the 1 hour, you guys can see the 200. So it would have to pierce and then bounce in. So I'm looking for the pierce. I'm looking for the demand zone where the unfilled orders are. And I'm looking for RSI to go below 20, showing it's heavily oversold. So that's one of the setups I'm still keeping an eye on. In fact, I just need to delete that now that I have talked about it. Pound dollar. Yeah, that's another one I'm still keeping my eyes on. I know Nick and I kind of briefly chatted about this one yesterday. A couple other notes that I failed to mention about this was the fact that when we bounced into this zone where we were at actually yesterday when we were on stream, we had yet to hit the 200 EMA. So that was another one of the reasons that I elected to stay out of this 4-hour zone. Okay, if I go back to my 4-hour chart, because it looks great. I mean, indecision candle, kind of a fat doji candle, if you will, followed by a gap out, push down and break of this little wick, break the structure. So when you're looking at that and unfilled orders, it looks great. But again, go back to the 1 hour, we failed to meet the 200. The 200's dancing a little higher up. So I remain the same as far as which of these 3 supply zones I enjoy the most. It's definitely going to be that middle one. I think we ended up agreeing on that at the same time, because again, we've got this former support that's already become resistance once, because there's your support. Here's a support. Here's a support. And then on Sunday, when the market gapped all the way down after the weekend chaos, it actually retraced back up. And that's where it became resistance for the first time. So it became resistance, but it also became a supply zone because look at obviously the action or the reaction thereafter. Okay. So very strong spot right there. Obviously, it would be forced to pierce the 200 EMA. And then by then, I would expect the RSI would hopefully give us a nice overbought reading for that possible short. So that does remain one of my top things I'm keeping my eye on. Highly doubt we get this week. This may be a next week type of thing. But yeah, that's definitely one of my faves. And again, the euro pound is the one I just showed. Aussie Swiss, this I think was another one I was looking at. Let me see. We had kind of created a 2-hour demand the other day. We bounced in it. Let's see, what was my reason for staying out of this one? Aussie Swiss, because I know we're getting a nice bullish reading of looks like a +8 on it. Trying to remember what the reason was for me staying out of this. Oh, that's why. Because when we got our hour candle close, it was so strong, it closed like way far away and skewed my reward risk. I might have actually went over this yesterday, now that I think about it. But anyway, that's the more recent alerts I've had hit. And then the last one is the Nasdaq, guys. It's actually giving us a little bit of a bullish signal over here, +7. Now, because we are still, I feel a little bit in the risk off overall environment. Yesterday was a little bit of risk on. So I really just kind of want to dig into some of the sentiment analysis readings on this, going over here to crowd sentiment, put to call ratio. Again, looking at Nasdaq, since it's giving us that bullish signal, where are we at over here? And this is really what's going to kind of help me on this. Okay. And you can see we did actually cross the line on the high put volume. So a lot of puts in the options market, a lot of bearish bets. Looking at it as a contrarian signal, that could be a good buying point. So I would like it to be a little higher up, to be quite honest with you, but it is what it is. Also, I know Nick looks at the AAII investment survey quite a bit, and it is still overall bearish. So that's another contrarian signal to buy potentially. And then retail sentiment itself. So just talking about the regular Jack and Jill traders at home on their laptop, on their smartphone. Where's NASDAQ over here? Well, it's heavily shorted. Look at that, 83% net short. So you want to talk about a really good contrarian signal? There you go. Observe the masses, do the opposite. So that's a contrarian signal. So all these are basically giving us contrarian buy signals from the retail sentiment, from the crowd sentiment. And as far as the banks, the big banks and institutions, where's NASDAQ over here? And this is kind of the drawback. Because remember, the report that's accurate as of this past Tuesday, two Tuesdays ago, right? So not 2 days ago, but I'm talking 9 days ago, it's heavily sold off. And with all the craziness this week, what do you think the banks are probably going to be doing? Do you think they're going to be excited about loading up on risk on assets? I don't know. I don't know the answer to that, but if I had to put my money on it, I would probably say probably not. Now, that's just one piece of the puzzle when we're looking at the COT report on the top setups. But for me personally, I don't know about you guys. The COT is one of my favorite ones to follow out of all these, just because, hey, who makes the money? Who makes the most money in trading? Is it us retail traders as a collective group, or is it the big banks and institutions? Right. So I try as hard as I can when I get a bullish or bearish signal. I try hard to make sure that COT is lining up with that same direction. That's just the way I look at things. I want to ride their coattails, guys. Hop on the wagon, drive the wagon. Let them drive the wagon. I just want to hop on for a ride. So that's one of my favorite set odds enhancers on this list. So anyway, closed my euro pound trade this morning for a break even 20. Yeah, look, it's being lazy, right? It's being lazy. I mean, just going back to that for a second. Now I'm sticking with it. I just want to see what happens over the next 20, before the end of the intraday week, next week, tomorrow rather. I just want to personally see what happens. I mean, it hasn't really. Let's look at this a little deeper. So again, sideways trend, just in this last 2.5 days. We are at the lower end of it, but here's the thing: we keep getting wicks. A little bit of wick action there, wick action, wick action. Obviously, a lot of wick action here. Now you're getting the same up top. But it's basically contracting on itself. It's coiling up. What happens when price coils? Whether it's a pennant, whether it's a flag pattern, whether it's just a straight sideways contraction. Okay, this is basically a one big contraction point. Because I guarantee you, if I turn on my master pattern indicator, go to like a 4 hour, yeah, it's giving us an orange box. That just means a coil action. So at some point, price is going to want to leave that box. Now, obviously, it could go down, it could go up. But that's typically where it's met with liquidity. Because like under here, there's a lot of orders down here. Let's do this. Okay, there's a lot of, let's draw this up real quick. So there's a lot of sell orders. Let's get this over here. There's a lot of sell orders there. And then on the other end of that, there's a lot of buy orders. Yeah, I'm trying to draw my boxes. Let's try it this way. A lot of liquidity on both sides of this. That's what I'm trying to say. Because these people up here that shorted the market, their buy orders are just above. So there's liquidity on both sides of that. So, a lot of times what happens is you get price leaving the zone, collecting the liquidity, go back the opposite way. The very same thing could happen here. So this is partly why I left my stop loss. I gave it quite a bit of wiggle room, because I know that there's going to be liquidity chilling here, right? So potentially what we could see is price drop in, collect the liquidity, bounce the other way. I don't know that, but I'm just positioned for that. So I'm going to personally just let it do its thing. Yeah, again, though, if we get to about the lunchtime doldrums tomorrow, okay, where we've only got 2-3 hours left, might just go ahead and hop out of it regardless of where we're at. Because I damn sure don't want to be holding it over the weekend. But yeah, I like it. I mean, I'm going to stick with it. We're still getting a bullish 5 as far as I remember. Yeah, +5. Again, this was a +6 score when I got in it on Tuesday. Okay. So it's only lost 1 pound of strength. But if I look at the strength of those individual currencies, surprise meter. Okay, the euro remains the second strongest, and it's actually improved a little bit. So it's at 80%. And the pound is still in the gutter. It's still 20%. So if the fundamental analysis, to me, is the most important analysis group, well, that's matching everything. You got a strong euro, you got a weak pound. The euro's had like what, 3 or 4 pretty bullish reports of late. Look at all these the last 7 calendar days, guys. This is basically the bottom 6. You got 1, 2, 3, 4 bullish reports and only 1 bearish. So that's the bulk of your strength right there. And then we did have the neutral report for the manufacturing PMI, okay, the GDP from almost a month ago, about 3 weeks ago, we'll call it. So yeah, 4 out of 5, simple math equation, simple division, 4 divided by 5, that's 80%. Right? And then when we look at the pound on the other side, we've had 1 bearish report in the last 7 calendar days and 1 neutral. So I like that. I like that ratio. And then again, it's only 1 bullish report, and that was their retail sales number from what, 2.5 weeks ago or so, 2 weeks. But a lot of red on here. It's a bloodbath. Okay. And again, that's why I always say this for me personally, I don't know about you guys that have Edge Finder. This is my second favorite chart behind obviously the top setups, because I want to see what's strong and what's weak. But yeah, currently you got the Aussie dollar. It's actually ahead of the euro, which is nice to see, because I know Aussie was giving us some strength there for a while, and then it kind of died off to the 60s, the 50s, I think, for a few days or so, and now it's back up to 83. So there's your number 1 strongest currency if you're just isolating the fundamentals. As far as, let me look at my cheat sheet over here. I always write down some notes, things I want to look at. As far as some opportunities, I've got pound Aussie and pound dollar shorts. So that's the 2 main ones I'm looking at for potential shorts, whether that be, today, tomorrow, or even Monday. And then I'm looking at 3 longs. 4, but I've already went over dollar yen. So let's go look at a couple of these shorts. So pound Aussie was one I was keeping my eyes on. Again, it's giving us a -8 score, so we're looking nice and weak. Pound Aussie, and you guys can butt in if you have anything you'd like me to bump to the top of the list. By the way, I can definitely check it out. But in the meantime, we'll look at pound dollar. Yeah, and that's the one I just went over. So still just kind of keep an eye on. Yeah, that's right, that middle supply. So never mind, I've already went over that one. Pound dollar as well. Oh no, that's pound dollar. I'm sorry, pound Aussie. Yeah, pound Aussie. So this was another one, guys. This was another one that bounced into a supply zone and just had way too strong of a reaction for me to get into it in time, because by the time price closed, for me, looking for that 1 hour bearish candle, or even if I drop it to a 15-minute, it skewed my reward risk. That was part of the reason I didn't get into some of these. So we like strength and weakness, but sometimes you don't want it to happen all at once. Shorting after this bearish candle right here, after bouncing in, well, that from there to the demand zone's 144 pips, which is a lot of pips. But if I divide that by 2, that's what, 70 pips? Right there's your 70 pip mark. So that would have to be my 2-to-1 reward risk. But it's not even incorporating the rest of the wick or the stop loss, or I should say the supply zone. So that would have pretty much turned it a little closer to a 1-to-1, and I just don't like that. I don't like that at all. Now, we are currently bouncing into a 4-hour supply zone. What about my 1 hour? Okay, 50 is below my 200. I like that. But my RSI has yet to reach the 80 level. It's kind of hard to see, but if I zoom in, you guys can see we've yet to hit the 80. So that right there is holding me back. I'd like to see price go a little bit higher, because if I drop it down to, I believe, a 15-minute and go dig into this supply zone just a little bit deeper up here. Actually, I think it was a 30-minute now that I remember. Yeah. Okay, if we dig into this supply zone a little deeper, I've got a 30-minute nestled inside of that higher time frame. So there's my confluence, and there's my white line showing where the proximal line of that zone is. So I do have a little bit of a gap. It's not the sexiest of gaps, but it is a gap nevertheless. So that's actually the trigger point for this. So I would like price to come up a little deeper. And then as long as it comes into that zone a little bit higher up, I really want my 1 hour to bounce into the 20. So that's why I haven't gotten into it, because it's, just because it's hit the 4 hour. Again, I like to find confluence. I like to find multiples, at least 2 sets of eyeballs on that. The 4 hour zone traders, in this case, the 30-minute zone traders. Okay. There's a lot of traders for all these different time frames. And my goal is to get as many of them in my favor as possible in the same zone. So that remains my pound Aussie potential there. This is probably the closest alert I have right now, just because it's really not that far away. It's only, 20 something pips. And then pound Aussie is also has an ATR, excuse me. It has an ATR, an average true range of 150 pips. So I do believe pound Aussie is the fastest moving currency pair among all the combinations of the 8 majors. Okay, 150 pips, that's quite a bit. So that's more than enough time to come up here before the end of the weekend. Okay, I would say if the lunchtime doldrums come and go tomorrow and we start getting into that afternoon period, I would probably think about just skipping it. But hey, if we can get into this zone between now and, like I said, well before the lunchtime doldrums set in tomorrow, then that's probably my closest one. So again, we're still 20 pips away, but it moves 150 pips. And just for context, dollar yen moves the fastest among the US dollar pairs at about 120 pips. So 150 is a pretty, again, this is the Lamborghini. This is the Porsche. This is the one that moves a lot faster. So might have a shot at that, guys. As far as the most current one I'm looking at. Let's see here. What else I got, ladies and gents? Got Aussie dollar Swiss is the long I'm looking at. Where are we at over here? Aussie Swiss giving us a +8. Let's go have a look at it. Let's go see what we got. Okay, daily chart over here. The 8 is above the 21. I like that. And by the way, I need to make these lines a little thicker so you guys can see them a little better. Tell me if that helps, guys. That help a lot? Let's do the same thing over here. And let's thicken them up a little bit. I like it nice and thick. All right, there we go. Now you guys can see the lines better. Okay, so I'm looking for a buy over here. Where's my 1 hour chart? Okay, I got my 50 above my 200. That's great. I've got a demand zone below, but the problem with this one is still isn't overbought enough for me. Again, I'm picky, guys. This thing comes your default 70-30, but I use 80-20. I want the more extreme readings. So that's the only thing keeping me out at this point of this demand zone here, because this is a 2 hour zone. This 2 hour zone right here. Okay. Let's see here. 10:30, 9:30. Okay. I was just looking at my time, guys. I got 5 minutes. I tell you, these 30-minute segments just fly by. I feel like I just get warmed up and then it's already 5 minutes to go. Good stuff. But anyway, that's Aussie Swiss. Yeah, same thing. Kind of similar to that previous one we looked at. I've got a confluence a little lower. That's that white dash line. Perhaps by the time we get a drop down, maybe we'll get closer to 20. I don't know. But I have my set of rules. They are rather rigorous rules, I think, guys, which is why I have them. I've got it on an Excel spreadsheet. When I turn my charts on every day, when I turn my computer on every day, the first thing I see is my trading plan. By the way, on that note, what do you guys think? Tomorrow, should I whip out my trading plan just to give you guys an example to look from? When I went through classes at Online Trading Academy, we had two things drilled into our heads hardcore. We had risk management. That was number one, okay, protecting our capital. Number two was our trade plan. Writing up an actual real trade plan. We don't want to just leave it in our head. We want to put it out on paper as a visual. I just personally choose to use an Excel file, Excel spreadsheet. That way it just opens straight up. And every single day is the first thing I see. It's just a reminder for me to, Tiger, make sure and abide by your rules. The rules that you set, okay, the rules I set for myself based off my personal algorithm. If we have time tomorrow, I might just do that, because I would encourage you guys to write down your own trading plan. I just think it's easiest on an Excel. You can write it down with pen and paper, whatever. But yeah, I think I might do that. Okay. We got everybody that does these streams does such awesome work on the signals and things of that nature, the potential setups, that I might just spend a couple minutes doing that. I just want to show you guys what a good mindset, or what I think a good mindset is. It's not saying to use my trade plan. It's just saying use it as a gauge so that you can make up your own trade plan. I might do that tomorrow, guys. I think that'd benefit a lot of you, especially going into the weekend, to give you guys something to think about, or maybe even just kind of start writing up. But yeah, I might do that tomorrow. Let's see, a couple other things before we get up out of here. We got CAD Swiss is another one I was keeping an eye on. I do not believe that one was on the list. Yeah, never mind. Swiss yen, that's what I meant. Oh, wait, never mind. That wasn't. Aussie Swiss. Aussie Swiss, that's the one. Aussie Swiss. No, I already went over that one too. Let's take a look at a couple of these majors, guys. We'll close it out with that. And then, Bitcoin. I know we had some discussion about Bitcoin earlier in the show with some of the other guys. That's another one I'm keeping an eye on. I've got a really nice, we've obviously got a bullish signal on the Edge Finder, but I'm keeping an eye on a couple of zones here. So the zone I'm looking at is a little deeper down. Okay, I know I think there was a little bit of talk up in this area earlier, right here, which is it's the thing I like about this zone is it's got some very strong participation from the institutional, people. You see the VSA, the volume spread analysis candle with a big red candle. A lot of strong interest right here. So it wouldn't surprise me to see a bounce from here, but I personally am just waiting. Again, this is a big rule for me, is wait till we get a piercing of the 200. So the next demand zone has that 200 going right through us. So that's what I'm looking for, 50 over the 200. Again, guys, I just need to see the RSI sell off quite a bit more, at least 10 points more. And if that's the case, the Bitcoin is going to be one of my favorite ones, because I don't mind. I don't know about you guys, but I don't mind holding this one as much going into the weekend and throughout the weekend, because, for me personally, because I can close it whenever I want, even if it's over the weekend. Can't do that with currencies and anything else, right? But with Bitcoin, at least you can stay on top of it a little bit more. So this is the one that I'm okay with holding over the weekend. So I am looking for that as well, whether that hits today, whether that hits tomorrow. It's probably one of my favorite ones to look at. It's about a 61.8 retracement if you look at this swing low to swing high. Okay, so it's matching there. But yeah, again, it just all hinges on RSI, man. I gotta see that oversold signal. So and then as far as just the overall Dixie itself, keep in mind, I think we still have plenty of room to run to the upside. It's already been the strongest currency by far this week since all the chaos broke out. That's where all the money flocks in these risk off types of environments. And so I see this supply zone, this daily supply up here, as the next leg of the journey, so to speak. So I think we got plenty of room to run. That's why I like the dollar yen, and the pound dollar short, and even the euro dollar short, but more so the pound dollar short. Yeah, so euro dollar still giving us that -6, but pound dollar is a little weaker, and I do like that. So pound dollar, pound Aussie, two favorite shorts. Dollar yen, Bitcoin, And then I'm just going to sit back the rest of the day and the early part of tomorrow to see how euro pound wants to go, see if it wants to give us any type of a boost. But regardless, I am out of this trade by the time 3:45 p.m. my time comes around tomorrow. That gives me 15 minutes to get up out of the trade so I can breathe over the weekend without having to worry about it. So with that, ladies and gents, that's all I got for you for the day. We'll be back tomorrow bright and early. So with that, have a good day. Stay safe. Talk to you later.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.